pharmaceuticals, more importantly, commodities. Because if India does not invest in core commodities, we will become the second largest importer in the world. There was a recent research published by JP Morgan that talked about how India really needs to double and treble its investment in the core commodity sectors, whether it's steel, aluminium, refining, for us to really meet the demands of an economy that's going to grow phenomenally. So one of the laments of the Indian industry has been, all this is great, but where is the financing going to come from? I actually believe that there is no dearth of financing. We've seen companies access the capital markets because when the initial construction phase of the project is over, there are ample instruments available to do takeout financing. The overseas bond market, the Indian bond markets as they are maturing more and more. If you look at the number of corporate debt issuances that took place last year compared to the overall drawal of bank credit lines by corporates, you will see very clearly the point that I'm making. But that still begs the question, okay, who's going to come forward and really fund the construction phase of the project where the risks are highest? Particularly in a sector like infrastructure, where you are reliant on a lot of government licensing rules, tariff issues, land acquisition, right-of-way for road projects, etc. And therefore, one could legitimately argue that a financial institution that was singularly focused in terms of spurring this construction phase financing is something we need. I believe it's wrong to call it a long-term developmental financial institution because that model is well and truly dead. However, you do recognize that over the 3 or a 5 year period that it might take for construction, particularly for very long gestation projects, you could do with an institution which is sponsored by the government to assume a risk there. So to my mind, I would rather call it a project finance guarantee corporation, which agrees to take the first loss default during that implementation phase of the project. Once that is done, the likes of our large banks, whether it's State Bank of India, ICICI Bank, Axis Bank, HDFC Bank, Bank of Baroda and others, they're going to come forward because they know that the first loss is going to be taken by this institution. So the 20,000 crores that the government has put as outlay for this, I think should be matched by 20 or 21,000 crores coming in from other sovereigns, quasi-sovereign bodies. And together you put an institution worth 40, 41,000 crores where it's doing a first loss guarantee for, say, 15, 20% of that. Your leverage is much higher. Otherwise, you set up an institution with 20,000 crores and concentration limits that prudent regulation will always require that you cannot lend to a company more than 10 to 15% of your net. You can imagine, therefore, how many projects are they going to be able to finance? And you're just increasing the concentration risk there. Whereas, if you're now required to fund projects of 50, 60, 100,000 crores, you will need someone saying, okay, I will take the first loss default and then bring in this. And once the construction phase is over, the long-term saving pools, whether it's overseas investors, through our masala bonds, or indeed the Indian long-term institutions like Provident Fund and the insurance sector will actually come in because they are actually looking for high yield or moderate yield, stable, long-term yielding assets.
Ma'am, you brought up the question, brought up the topic of insurance, but before I go to that, one small question. So you think that DFI will perhaps bring back the animal spirits that have been missing in the Indian economy from the private investment perspective? Because many observers believe that it's a policy flip-flop, which is the villain of this entire piece. You think it is DFI?
So I believe we need certainty in the policy prescription. The entire way project finance used to be done. You got a piece of land, you just hope for everything else to fall in place and embarked on your construction phase and tied up bank financing. That's not going to work. You will have to fully bolt every aspect of that project finance, whether it's access to the mining rights, whether it is access, acquisition of the land, all the regulatory permits, those are done. You bring in this project finance guarantee company in, banks will naturally line up for financing that, and then you've got a winning risk.
So, Kalpana, this is, you are saying that DFI will almost be like an insurance for these projects, so you have a backup, because these projects are very long gestation, like you mentioned, they're very long, and to break even, forget profitability takes quite a lot of time, and taken down quite a few companies, in that effort. So just to take off on that, the insurance sector in India, because this is, like we said, the financial marketers summits, we have a lot of insurance people also listening in. India's insurance sector has generally lagged its, Asian counterparts. So now that the FDI limit has been increased, to 74%, and there is a possibility of an LIC IPO coming, do you think these kind of steps are going to give the sector a boost in India?
Absolutely. It's close to 21 years since the first license was awarded to a private player in insurance, right? Ever since insurance got nationalized. And the journey from 26 to 74, I think, is going to give a big fillip to the insurance segment. And it's absolutely necessary for channelizing long-term savings of such a young population in India. Whether it is the pension plans, the insurance companies channelizing long-term savings, and then putting them in moderate risk, or I would say argue that after the implementation phase is over, it's really very little residual risk, and give them access to this long-term assets that you need to match the long-term liabilities that the insurance companies and the pension companies would be undertaking.
Ma'am, we'll end, it's been lovely listening to you. We'll end this session, but with one question. That is, 20 years ago, ma'am, you really led the trend of women bankers occupying the corner office and providing real substance to India's most critical sector, which is the BFSI sector. Today, we don't see this trend continuing. You and your compatriots at that time have not been succeeded by women. How can we groom the next Kalpana Morparia and other great female leaders that we saw during your time?
So I think it was one of those coincidences that take place in history, that at one particular time you saw a lot of women leaders. We're currently not seeing that many, although that's not true in the foreign bank segment, right? Until I retired recently, there were 4 of us leading foreign banks. And I'm sure it's a question of time where you'll see, if not 40-50%, we'll see that over the next several decades, but you will see close to 15-20% of women coming up and occupying the corner suite. I think the problem really that we are seeing in terms of greater gender participation in senior roles is that there is a fair amount of leakage at the middle level. So if you ask anyone in the BFSI segment, at entry level, we're roughly the same. Not 50-50, maybe 40-60. But in that mid-career growth phase, you tend to see a lot more leakages. And I think both companies and women need to be addressing that leakage. Once you address that leakage, it's very natural as the pyramid gets narrower for you to see women rise.
So how do you do that? How do you ensure that the leakage is not there? How do you ensure like a Bumble-like listing happens in India, where a woman is holding her child and managing to list a $1 billion company?
And if anyone can do it, it's the Indian women who can do it, because we have a phenomenal support system in our country. Our parents, in-laws uproot themselves to be with their daughter or daughter-in-law and support them. And we also have a lot of support infrastructure around us. So I think it's really hand-holding women during some of those key phases of her life and make her feel wanted and engaged in the organization. That's what companies need to do. Women themselves need to do something. I just can't say you do everything for me. I need to do something. See, come what may, I'm going to make the necessary adjustments, and I'm pursuing my career in my own right.
Here's to another decade of that will be ruled by women, ma'am.
Thank you so much, Kalpana, for joining us. It was a real pleasure speaking with you, and do stay with us for the rest of the program. Thank you very much.
Delighted. Thank you so much.
That was a brilliant session with Kalpana Morparia, right, Alokesh? That
Yeah, indeed, indeed. And
optimism
I was
ringing
just
through
thinking,
over 20 minutes.
she was talking about long-term, investments and long-term savings, and that is one area where we've got, insurance companies and a mutual fund company also joining us. And the mutual funds, of course, have been trying to get the retail investor to get in, for a long time, and
Yes.
hopefully, COVID is going to, push them towards that a little more.
Absolutely. On that note, it's time for our first panel discussion to begin. And we have a very strong panelist lineup that will surely give us a strong start to today's program. So allow me the privilege to introduce Jasneet Bachal, Chief Marketing Officer, Yes Bank; Srinivas Jain, Executive Director and Chief of Strategy, Digital and Technology at SBI Funds Management; Alok Bhan, Director and Chief Marketing Officer, Max Life Insurance.
We also have with us Manish Dubey, Chief Marketing Officer of ICICI Prudential Life Insurance, and Apurv Sood, Vice President, Global Business and Partnerships of WebEngage. Welcome, everybody. We'd like all to switch on our cameras and let's get started with the panel. So, just a small note, before the pandemic, the BFSI industry was already into digital marketing in a big way. And this is a marketing panel, right? And but digital marketing is a trend that has really accelerated. It has taken up a lot of steam with the impact of COVID. Web platforms, mobile, even social media are today being used far more than they were, before COVID hit us. And these are being used extensively by BFSI organizations as gateways to for customers to use their services. The fact that BFSI employees also work from home, for a long period of time during this crisis, actually complicated matters.
This involved creation of campaigns through online collaboration of teams, deploying them while sitting at home, creating a more perhaps empathetic engagement model with the customer in this time of crisis, and greater personalization of digital communications for the consumer. At the same time, marketing budgets also got a cut during this crisis. So BFSI.
That's what
Sorry.
always happens, right? I'm saying that's what always happens in a crisis. First,
Yeah.
cut the marketing budget.
Absolutely. So the BFSI sector has had to do far more with far less at this time,
Yeah. So, all right, let's now take these issues to the panel and let us begin. I was very interested in the mutual fund area. So let me speak to Srinivas and come to the mutual fund view first. So Srinivas, you have products and solutions for small retail investors, and you also have products for global institutional investors. So there's a wide range, right? So what's your strategy to attract this entire gamut of customers, in a post-COVID world? Would you say that the traditional marketing mantras are still effective, or have you evolved to a new set?
Thank you, Alokesh. Yeah, it's an interesting question because traditional itself has evolved over time. So what was traditional pre-COVID was not traditional today. But what will be today traditional will change again next year when things change. But for us, I think the advantage of being a very recognizable brand, a trustworthy brand, we actually were kind of beneficiary during the COVID crisis. I would say a whole lot of assets did come to us. In fact, our market share went up quite significantly during this period, largely because trust factor plays a very important role during, COVID kind of a crisis. So we kind of did well to position ourselves during this period, transparency, increasing more communication. While I don't think we did more spends, but we ended up spending more on one-to-one communication with our network, with our channel partners, and more importantly, our investors. So we have now more than a 1 crore investor base with assets of more than 5 lakh crores in mutual funds. So that gives us a huge opportunity to, reach out for them, assure them about both our capabilities and the future of the economy. And that also gives us a lot of opportunity to upsell them because as markets started dipping in March onwards, there was a huge opportunity. As you might have seen, there was a whole lot of SIPs that actually got stopped and a whole lot of communication had to be done during this period to make that happen. Today, I'm very happy to say we have 5.5 million customers who give us SIP every month, which is a very, very large number. That means our business is kind of now on a stabler ground than what it was, let's say, 6 months ago.
Say then overall, just for a small thing which I was really interested in, would you say that the retail part of mutual funds, is that increasing? The share of retail investors has
Yeah,
been
I mean, as a
that?
percentage of assets, it is not increased dramatically because institutional money is still big. But there are two ways to call out retail. One is to say genuinely how many retail customers we have. We have more than 1 crore retail customers. And that number has actually gone up even during COVID period. So there is no problem there.
That's what I wanted.
The second part about it is there is retail which is coming under the so-called institutional. So we manage the EPFO money. The EPFO money, when they invest with us, the beneficiary has another 8 crore customers who come as part of that. So when I add up, what we call a secondary effect, the retail participation,
primary and your secondary together, yes.
Retail participation actually has gone up significantly for us.
Right. I'll take that question to Jasmeet. We were talking about retail participation, and we've seen in the past few quarters that if you have to reignite the lending basket, you have to be dependent on retail borrowers. That's what the past few results have shown us. So how do you calibrate your strategy around this? There are, despite Jan Dhan, there are still large sections of the Indian population who are still unbanked. So what is your strategy to pull them in?
I think what we must really look at in today's time is that at a large level, okay, because of given COVID, we've seen a huge psychological and social shift, okay, in the mindset construct of consumers. So as operating in the retail space, you have to really look at, there are three things which I can probably, in my view, I think that really stand out. One is that most consumers have shifted to a very rational purchase cycle. So they're very rational and they look at more need-based purchases, right? Secondly, most of them, the way consumers have started expressing themselves in today's day and time is that they're looking at newer ways of expressing emotion. They're looking at how to focus on self-care, how they can confront stigma. So this has been a huge shift in the way consumers themselves are coming out in the social and the emotional space and talking about themselves. Thirdly, one big shift is that consumers have recalibrated their interdependence on family, society, all of that, maybe community at large. So as an outcome of these large shifts, the retail strategy, the segments that you want to go to, all of that is informed by the broad shift in the consumer in the consumer behavior from a marketeer's lens. So for example, one thing is that banks are at the intersection of many industries, right? So there is huge opportunity to curate and involve different communities and segments into how banking can happen and cater to them in a very customized fashion by building the relevant customer journeys. Today we spoke, I think we started this session talking about how digital has sort of always been embedded in the financial marketing space, but it becomes even more important to provide both experience and to make the customer journeys profitable. And when we say customization, so it depends on the segments that you're really looking at, right? Whether you look at the unbanked, you look at the heavily banked, you look at different segments, you look at the MSME segment. So depending on what is the need, so heavy digitization and building the customer journeys, making them personalized for some, making them extremely relevant for the others. And that is the big learning that we have out of COVID is that stay even more relevant, right? Don't overwhelm the consumer, but walk with the consumer and in an empathetic fashion.
Yes, it's just the other day that Alokesh actually got 2 back-to-back calls from the same person,
within 30 seconds.
Within 20 seconds from the same marketeer, having refused his services first, he again called back. So I think that is.
And he didn't even realize that he was calling the same guy.
Yeah, I think that is what we need to fix. While we personalize the journey, we have to ensure that we, as you said, we don't overburden them with offerings.
So let me now go to the insurance leaders, right? Alok and Manish. And insurance has always been, anybody calls me, says, life insurance, lena. I'm like, boss, leave it. I have got the mere paas hai. So there is a lot of, there's also, I think COVID has also, brought in a lot of pressure on you because I think there has been a lot of claims, a sharp increase in claims that has happened, right? And there has been this perception of less trust for insurance companies, generally. So you think How has really COVID changed things for insurance companies like yours, especially life insurance, because it's very critical for us? And do you think this fast tracking of digital adoption tools and strategies, is it going to change the perception of distrust that is there? Alok, you want to start?
All right, thanks. Thanks, a good question. Good morning to all co-panelists. While yes, Manish and I will try and address this, the biggest the area which we are, as our industry, which we need to really settle down with, is this factor of trust.
Mm-hmm.
And the response that you introduced, the line that you used by introducing, life insurance bolte hain to baba ye nahi karna hai. And I think that is really where the crux of the industry is, and I'm sure Jasneet can add to that as well. She's also an ex-insurance veteran. Yes. The point really is that I think for our industry, while it's been, and as in the previous meeting, we talked about 21 years for the private industry to come in, the industry still has to build on awareness. Lot has been talked about. I think the regulator and all the industry has come together, especially in this time of COVID. Frankly, the most relevant product that is relevant in these times is life insurance, and we have seen that. Life insurance, health insurance, etc. And we've seen that in our demands as well. We've seen our Google giving out so many trends that life insurance has really increased, and even the industry has, some players have grown, some are on the process to grow. So the focus that I would like to say from a marketer's perspective, from a business perspective, is to grow the awareness and try and address the basic purpose of life insurance. Lots of times through various decades, we have seen life insurance has been sold as an investment product, as a product meant for saving tax, right? That is not the core purpose of life insurance. So when you say, Alokesh, that mujhe nahi chahiye, kyun nahi chahiye? You have to understand the core purpose of life insurance. The core purpose of life insurance is to ensure that your family's future and even your future is secured. And what more is relevant in these kind of times when the entire community, the entire human community was put at risk.
Right.
The health factors and the ability to sustain your livelihoods is questioned. People say this is a pandemic. The way I would like to say is, it is a pandemic. It's not a global pandemic. It's a personal pandemic. It was outside your house. It was lurking on your doorstep. And therefore, you needed to get prepared for it. So the purpose of life insurance really is to prepare yourself for a future that is secure, not for returns. Returns, there is Srinivas there, and there are many more 44 AMCs who will help you with that. That also we will provide. But the first purpose is about securing your future, your family's future, and that's the core purpose of life insurance. Now, when you think of that, Alokesh, then you should ask yourself this question. Alokesh, are you ready to take care of any future uncertainty in your life? Now, that brings me to a second problem. That to the young communities of your millennials and everybody else, why did they come back and say, why do you talk to us about an uncertain future? Abhi to humne zindagi shuru kari hai. You're starting to kind of, put a fear factor inside us. It's not about fear, Alokesh. The way I look at it is, it's about preparing yourself for the future, right? You will come through various milestones. Are you prepared for it? And frankly, once you're prepared for your future, then go and live life aram se. At least you know that you're confident. If something were to go wrong, you all are well prepared. Like in business, we all prepare provision for bad and doubtful debts. So kyun karte hain hum? So that if there's an uncertainty, we are all having reserves. To your second question, yes, deaths have increased. Yes, we have faced mortality issues. But if as an organization, and at least I can speak for myself, if you have provided for those deaths and your provisions, then that's the time that these provisions have to be used for.
Yeah.
So pretty much, I think it's about a decade away for people to really understand the core purpose. This event of COVID has certainly given a fair amount of support, and people are beginning to realize. I don't think as yet that it's a demand product. It's still a push product.
Yeah.
But people are beginning to realize much more. And digital will play and is playing already a big role. The simple reason that we have to be as a brand next to our customers. So wherever the customers are, like Jasmeet said, we have to be there as well. So yeah,
That's
the
good
journeys
point
are
you make.
complicated, but we made a fair amount of dent. The entire
I,
industry.
Right, I'll take that question to Manish. So, Alokesh spoke about the general distrust that has always been there with with insurance, and Alok pointed out that what he really said is that we don't really understand insurance that well, right? Somebody will bring a paper and say, "यहाँ sign करते हो, हम लोग sign कर देते हैं," not even understanding what we are actually purchasing. So, do you think the digital adoption will change that? This is your opportunity to ensure people understand, and therefore the understanding will propel people to buy more life insurance. They'll
And
understand
just
the
to
risks
add
more.
to Suchetna's question, one extra thing from what Alok said for you, Manish, is that do you think, because everybody is looking at life insurance as an investment product simply because they're getting that tax break, right? So do you think that tax break has actually done disservice to the idea of insurance? To you, Manish.
Hey, thanks. Thanks, Alok, for your comments, and Alokesh and Suchetna. I'll keep it extremely simple. This was a black swan event. What it did was it increased the felt need for insurance. Everybody got threatened a bit, and in the process understood the need for insurance. And that created some bit of an opportunity with Google searches going up during that time. Did we come through on trust as an industry? I think we did. When we started at our company level, what we saw, there was a lot of requests about knowing, are your policies covering COVID? This was the fundamental question that was being asked, and we did a lot of communication around it. And life insurance did cover COVID. While the claims are increasing or not is a secondary question. First question, are you covered? And there we earned trust by saying, yes, you are covered. Second point, how we earned trust was, if you see the life insurance companies' claim settlements, all the top companies are upwards of 97%. So the distrust on claims is not around life insurance. We are settling in 97% plus, with some companies going up to 99. So we are earning our trust all through. In this context, the digital opening up has changed the market for everybody, including insurance, including life insurance. And we feel that with a better approach towards media, the awareness that Alok spoke about and the trust that Alokesh spoke about, both are likely to go up. So that's one part that we see definitely as an opportunity to do. Again, coming to the digital media and how things are changing, in the new scheme of things, we saw many new people coming into our industry. So earlier who were coming had already thought about it, had a view, yes, positive or negative, but we saw a lot of new customers coming in to just explore. And at that point in time, we realized it's not only digital. Finally, it is digital plus some bit of a human interaction. If somebody who is at 40 plus, 50 plus, who is coming to using some of these things, and financial transactions, remember, are not so easy to make. And you can make smaller payments on your mobile, but larger transactions are still seeping in. The penetration is going up. So how do you earn trust for transactions? And that was the question. I think brilliantly put. So the next job is to earn trust on transactions, both on service and purchase. And my personal formula around that is, today, CX is equal to TX plus HX. So customer experience is equal to the transactional experience, which digital brings, and the human experience, which is fundamental to the trust that we are talking about. And any company, any brand that does well there is definitely like to win the tomorrow. But huge opportunities.
You didn't answer my question on whether this tax break has done a disservice to the idea of insurance.
Look, we have been talking about this. Surprisingly, people are no longer buying life insurance only for tax. It was a story which was maybe 10, 15 years back. It must have been absolutely true. Today, as you know, there are options to save tax without investing in any instrument. Like government has come out with direct route as well. Second, more and more, we are seeing our customers who are not really buying it for tax. So our dependence on tax breaks and all that is coming down over a period of time. And we are also, as an industry, working towards a setup where that does not become the primary motive for buying the product. So I would kind of say it's neither a service nor a disservice, but it's rather becoming a fundamental need, and that's driving purchase, and that's good news.
That's really good news. In fact, that's fantastic. And I'll come to Apurv now. Apurv, you are the enabler of a lot of solutions right? As WebEngage, you are the enabler of a lot of solutions for enterprises like as we see on the panel and those who have joined us. So give us your views on this whole issue of trust for the insurance companies and greater participation of retail in the mutual funds and the trust in banks, and how can tools like yours and better strategy help these organizations meet customers' expectations better. And do you see really any change, because you are interacting with these people on a regular basis, right? Do you see a change in strategy, a change shift that is likely to stay, because of the pandemic?
So, hi, thank you for the question, Alokesh. While I think most of the panel brought in good inputs on each of the domains, I'm going to bring in something from a software come marketing automation standpoint, which enables communication. And I'll bring in also a global context. I'll step back for a moment and I'll say, what do we need for communication? Right? Ultimately, whether you're talking about trust, whether you're talking about anything else, what you need to do is communicate that via some medium or channel or mode, right? And to take a step back, what you realize is you need data for all of these sort of things. So for us, the way I look at it, I think we've been talking about digitization of banking for a really long time. Some people have given it'll take about a decade to get more stable and all of those sort of things. But what happened with pandemic is suddenly product you had to go for towards a product or service, right? So for example, most people would either send agents or go to banks to actually talk about retail banking or personalized banking, or phone banking was an extension. But this DIY mode of filling up forms, signing up things, doing things wasn't yet as matured in process. What happened in this pandemic is that banks, life insurance companies, and other insurance companies suddenly had to bring these services at your doorstep without actually having a human interaction or an agent in place or someone in between of sorts. I think that has turned out to be a very big boom for us. And I'm seeing all of this aligning in communication as well, right? Now, I think people are trying to talk about, unifying the omni-channel experience, right? Which is both branch-based banking versus digitalized banking. People are talking about omni-channel consumer journeys more seriously, right? And hence bringing in the whole aspect of bringing in personas together, user profiles together, bringing in this whole concept of how can we, as rightly said, right? One of the panelists highlighted that, in fact, you highlighted that, I was getting a communication to sell me insurance or something by different people and different agents. What is this? So one in the next stage of the journey, now that we are in, what I feel is that it's a good initiative. A lot of cloud is coming in. So people are more open to cloud digitization, these new concepts. I think what will happen eventually is once we talk about data and bring all of these things together, we'll have to figure out a way to not only communicate, but communicate with keeping some sort of consistency in mind. Who are we talking to? When do we need to talk? What do we need to talk? At what stage, what needs to go out? Which channel or which medium would the person be comfortable in? What is the previous context of a communication? How are you going to, so, I understand, there's always going to be a big thing. And now with, it being digital, it becomes even more harder, because when you're, people sitting in a room together, having a conversation is trust. It makes your life easier. You can see a person, you can actually, look at the body language, look at the kind of tonality the person is using. Now you don't have all of that, right? You're basically interacting with a computer screen to figure out, buy a product, right? Now I'm not talking about just cheap products. Like I'm talking about stuff that could cost you crores over a decade or a couple of lakh rupees, right? And looking at our per capita income, all of these numbers are pretty huge, right? So now to enable trust digitally is going to be really hard, and it's going to take a lot of reinvention and innovation internally to make sure that trust is bought you win back trust online, and make sure you scale digital banking heavily across sectors, domains of banking finance. So I see this adding a lot of value in the long run. And I think what COVID ideally has done is accelerated the digital growth. So a lot of us as companies are very happy from that standpoint.
Of course, Apur, what you said also ties in with what Alokesh began this panel with, that the first thing that gets cut when a crisis hits is marketing budget. I'll come to Srinivas with this question. So, how do you adjust your marketing budget during a crisis? There will be constraints, right? And so, with those constraints, how do you approach new concept, new campaigns? How do you exactly do more with less?
Well, that's been the marketer's dilemma forever, right? You are always provided less than what you want.
But COVID would have accentuated that problem, right?
That's also true because of the whole economics of the business. One of the downsides to all this is cutting down on marketing expenses.
Right.
So honestly, there is really no science behind it. There have been companies which I have seen on the e-commerce side who've doubled down during this period. But I think BFSI as a whole has not been very aggressive. A couple of things have happened. I think whatever limited budget was there kind of moved to digital, and less kind of happened on your traditional media. And that's kind of changing now slowly, because traditional media is also important in building certain conversation, brand equity, and others. For us as an industry and us as an individual company, we did not see major change in dip in our budgets, but we changed in the way we used our budgets, right? So we did a lot of digital events compared to physical events that were anyway not happening thanks to COVID. And also, I think one of the biggest thing that happened to us, and I work with this mutual funds IA campaign with Amphi, the industry actually doubled down on our expenses during this period on the mutual fund campaign. So that kind of helped, right? So we used this IPL as a big branding event for the mutual fund industry, and we had cricketers endorsing us. That really helped us in, even if we didn't spend enough, there was at least from a mutual fund understanding education point of view, we had enough and more customers coming for us, right? So we were not necessarily left high and dry because there was not much of visibility as a category. But as an individual fund house, as an individual marketer, we spend more time in trying to drive business behavior with existing customers, with our B2B network, which we predominantly mutual fund as a B2B, and also, of course, building our digital channels and networks. That was where most of our money went in. Very less was spent on our traditional media, at least during COVID period. That's kind of changed in the last month or so when economies have opened up. Print being one of the sufferers, we've now gone back to print with some amount of investments, but we will do more of that in more of those segments, simply because there is still a whole lot of people who still depend on that particular segment for communication and reassurance. So you will still see, we don't write off something because something new has come up. We just have to look at each segment with a different target group experience. And that's something that's happening. Per se, we didn't struggle too much with budgets. We were okay with what we were got, but just that we changed our business plans. And as I said, the biggest boon that we had was mutual funds IA campaign.
Yeah, I was just coming to that mutual funds IA.
That was a really good campaign.
Yes.
Funds IA.
Yeah.
In fact, I referred to the campaign a lot of times.
Yeah. Alokesh, you said something we couldn't hear.
Yeah.
I say that I've referred to the mutual funds IA campaign quite a few times in several of my panels, because I find that idea of storytelling is really good. Storytelling has been there forever, right? But the mutual funds IA campaign is really
gave us, Alokesh, we actually doubled down this time. Our spends were almost close to double compared to what we were doing a year before, simply because this gave us an opportunity to reassure people. One of the interesting communication we did this time, and we actually talked about risk in investing, which is counterintuitive to mutual funds IA. And that actually played out very well in terms of understanding of our mutual fund brands across, right? So it's really, really, initially we were scared whether this will play out well or not, but it did play out well. You get a great cricketer coming and saying, be careful before investing in mutual funds, do all your study, but in the long run, mutual funds are good for you, was a great message.
Thank you. Very, very well said. And I'm very interested to know, Jasneet, the story of Yes Bank in this, because Yes Bank, of course, you went through your own different kind of crisis in recent times, and you've come through it very admirably, right? And Yes Bank is much stronger, I dare say, than before, which is fantastic. But what does this do in this time of not just the COVID crisis, but the kind of corporate crisis that Yes Bank went through? Did your marketing budgets get constrained? How do you spend a lot of time just reassuring people that, don't worry, this bank is still there, we're still there, which we saw a lot of, right? We saw a lot of communication from the CEO also directly in different media, assuring people. And so what kind of a marketing strategy should organizations employ? You have come through fire and you've been sort of purified, as it were, right? But what sort of advice would you give to others who might face the same situation in this kind of crisis? How did you get through it? And one supplementary from an audience person who has asked an interesting question. You can just quickly answer that a little later, which is from a financial inclusion point of view. And Yes Bank has been very strong in the digital front. How do you see small and medium banks and NBFCs approaching digitalization, especially in remote districts of the country? So this question from Chandrasekhar T in our audience. Over to you.
You're on mute, Jasmeet.
Sorry, my bad. Thanks, Adhikesh, for the vote of confidence. So, I would definitely start by saying that unprecedented situations can open doorways to new possibilities. And it is up to us, professionals to really exploit those new opportunities, both for the benefit of consumer and the benefit of the institution, right? So, first, I'll actually step back and talk about the existing COVID opportunity and how we layered that to utilize it in sort of rebuilding the brand and trust in the brand. Yeah. Mm-hmm. So, for example, one thing is very evident is that in COVID times, right? So, whilst we feel that everybody is up and about, there is no unlock currently, right? But still, it is that have we returned to stability as consumers, or are we still talking about a return to normalcy? So, what we hear about consumers are going all around is that they're talking about right? So in COVID, there was this whole thing of how are consumers going to build harmony with the way they have to work. So you look at consumers who were working from home, they had their own set of grievances, their own set of insecurities, their own set of anxiousness. People who had to, sort of step out, had, maybe essential services, doctors, bankers, otherwise had their own set of challenges. There was anxiousness there too. So it was really COVID in unlocked times was really where the dominant emotion was anxiety. What the consumer wanted was very different, from what previously how the brands were associating with consumers. So consumers brought their whole selves in. Okay, it was up to brands to actually understand and start building those very deep-rooted relationships with consumers. Whether it is advertising you put out there, or whether it is product propositions that you're creating and taking out to the consumers for the benefit of the consumer, and of course layered with marketing and campaigns and all of that. So we've seen dramatic shifts, and at Yes Bank we worked on all the shifts to cater to the consumer, evolving needs of the consumer. Very clearly, we kept the consumer need at the heart of everything we've done every single day. And really what has happened is two things. One is that we had a lot of positive events, right? That happened in the from the institution lens, right? So quarter-on-quarter profits going up, right? Then we saw the ratings going up. We also raised a very successful FPO, which was the largest in the BFSI sector. So all these were very positive indicators from an institutional lens. As a marketer, as a communicator, it is our job to actually take it out and, in a very authentic fashion, convey that to the consumer. Yeah. So that is one aspect that we did. So what we also did in COVID times is we evolved the voice of the brand, the tonality of the brand very clearly. With the anxiousness and what the consumers were living with, they were actually looking for brands to walk with them. And that is exactly what we did. We evolved our tonality to be very authentic, extremely transparent, and walk the talk. So we've done actually multiple campaigns, launch of multiple propositions in COVID times, which are for the benefit of the consumer. We've also looked at how you can, when we're designing propositions, how you can fuse partnerships, to mobilize communities, how you can actually use marketing technology platforms to enable the communities that are your core target segments. So illustratively, if I pick, just a few pieces of work that we've done. So we did some campaign around Independence Day, which was really solving for the local grocers and the local brands and consumers, so that they could connect with the local brands and local sellers for sourcing of products. So we did a Yes for Local. We built an entire marketing technology platform. We enabled 1,000 plus partners on that platform for our customers. Likewise, when we recently launched an MSME proposition and more empowered proposition for MSMEs. And within that also we've built another platform which is about how you can enable different sectors in the MSME to actually engage and interact with each other for business benefits. So again, curating platforms. So how marketing has really evolved is that how do you curate the right marketing solutions for business enablement? Of course, at the back of it, I mean, not to say that you will give up on the job of building trust and all of that, but it comes closer to business, particularly in times, unprecedented times where there is crisis. There is pressure on balance sheets across all institutions, all corporates, and you have to be very, very prudent with how you're actually spending every little buck out there. It must have the right sort of profitability. It must sort of build the right connect with the consumer. We also did multiple campaigns which were largely in the realm of building trust. So we actually worked with the consumer, right from the unlock stage. So if our job was really about, positioning ourselves to build trust, and therefore we picked the proxy of responsibility, which is zimmedari. We layered it with, the unlock times of saying zimmedari se tayari. So whether it was about Yes Bank bouncing back with the positivity and the good, positive incidents that were happening at the institutional levels, it was the consumer who was actually moving from lockdown to unlock. So how the consumer can be responsible, so you take the next step with responsibility, and we are working with you in that responsibility with the readiness that is required. We also put out our Yes for Local in that. We also put out, simple solutions were needed for local grocers like Express Pay. How do you get consumers who are looking for contactless interactions? So the grocers and the local stores could just send an SMS and you could just pay, and the reconciliations, payments and all of that. So it is about how you build those interactions which provide simple ease, but actually are much needed in the customer journey to actually complete a transaction. After we did Zimmedari Se Tayari, we also moved to, the festive season. So we spoke about, how to responsibly celebrate, festive season. We are used to, so festivities in India have always been linked with, high level of spends. Over the years, last decade and a half, we've always seen loud promotions, loud discounting happening, right? But we know, there have been multiple sectors which have been hard hit. So while they are making a comeback, how do we encourage them and tell them that they're responsible for their own happiness? And we are working with them, partnering with them if there are loans that they need.
Thanks. In fact, we have limited time. We need to go to the others. I can see that you have had to use practically all your marketing experience to come through this, and it's really interesting, to hear your insights. Suchetna, you want to take the next question?
Sure. Jasneet just mentioned how you need to curate platforms to reach out to every level of customer. I'll come to Alok and Manish with this question. It's also a question from the audience, which I'd also like to ask you. So what are the kind of strategic innovations that both of your companies are doing to reach out to the rural segment of India? Because most of the growth we see is coming from rural India. So is that also a sector that you guys are looking at? And what are the strategic innovations that you're doing to facilitate your services by making it more feasible for rural India to buy life insurance?
Manish?
Alok, you're on mute.
Oh.
Yeah, can you hear me now?
Yeah, go ahead.
That's a very good question. I think it's about your whole company's strategy and therefore the segments you want to pick up. Of course, the growth is all around India and there's more growth seen in the rural segments, as I guess India is getting more flat in its typical access to digital and all those things. So yeah, how we have approached the segments in the rural side are actually designing products that are specifically tailored for the rural areas and for the rural customer. We have actually as a mandate from the regulator for long, 20% of our business has to be done in the rural segment. So we have products for that, be there individual products, be there term products, be there endowment products. The more important thing is you've innovated on the journeys. As Jasneet was talking about, it's not so much about physical face-to-face. It's more about, mobile to mobile kind of a journeys. Therefore, lots of technological interventions have happened to make our entire journey mobile friendly. I won't even say to make it desktop friendly. We actually leap from the desktop friendly straight to the mobile friendly. And of course, building
mobile
awareness.
friendly, do you only mean smartphones? Do you also mean the feature phones? Because
mostly smartphones, but feature phones is still an area which we have not catered to as we speak right now. It's not a complete segment for our brand to go there. We have focused on our segment. Mostly smartphones are located. I'll say that. I guess Manish can add. The larger institution, they can come back and say if they've gone to the non-smartphones or feature phones. So it's largely been tech-enabled, but more importantly, it's also been trying to do communication with them through webinars and through various awareness techniques. The aspect is that the journeys have to be friction-free. So things like a 3-click journey, get a policy issued in 3 clicks, getting all information already preloaded. All those things are in the way and have been done. The good thing is that we are close to now, instead of the mandatory 20% on rural customers, we are close to about 27-28%. Yeah. So we believe it's a more segmented game and a strategical decision on that.
Yeah. I'll come to Manish with that question. Years back, P. Chidambaram, as the finance minister, said that Indians are the bravest. And then he quickly added a note saying not because they're actually brave, but because they are the lowest buyers of insurance. So how do you intend to change that with, what is your strategy? How do you penetrate insurance further into the Indian economy?
2-3 points very quickly, Suchetna. One point is the fact that making insurance available at very, very affordable prices. And many of us are working in that direction. So you have today insurance, which is 20 rupees a month or 150 rupees for that. Even the Pradhan Mantri Jeevan Jyoti Bima Yojana, which came at 330 rupees, was a big hit at our company, and we did a lot of work to do that. And that is taking to the people who otherwise would not consider a higher amount. That's part number one. Part number two, it's a lot about now reaching out to them in their language. So vernacular is, as you know, is a good growth medium in digital, and we are trying to invest in that. And reaching out in their language makes communication easier, and the relevance comes in. Third, thanks to the digital growth and overall democratization of the smartphone, I think we are also partnering with some people who are already ahead. So you can't do everything on your own in the same year. So trying to get better products, trying to talk in their language, and then partnering with people who are already working in that direction is something that we are doing consciously. As an outcome of this, the penetration and the point that you raised about buying the insurance and to the right quantities will definitely happen over a period of time. The chances today are much higher than the chances that were there 5 years back.
COVID has helped that, right? And so has digital adoption.
Absolutely.
Interesting. And so Apoorv, what you as usual, I'm coming back to you with the technology question because you're the tech whiz in this group. And to Alok's point, that they're doing mostly smartphones, and I think a lot of the work is not only life insurance but several other consumer-facing areas are actually limited by this this sort of divide where you have all these apps and everything for smartphones. Certain things are getting filtered into feature phones in a sort of in some sort of way. But what are you doing in this regard? Are there tools and are there methods that you are developing or you have? How can you help these organizations reach out to the rural areas better with more effective tools for people who don't necessarily have the kind of digital access we have?
Super. Thank you for calling me a tech wizard, Alok. I'll not take that much of credit, but yeah, but yes. So the way I see this is right. I don't think it's about smartphones versus feature phones. First, to be fairly honest, I think it's about mobile. And the reason I say that is because with the beauty of innovation around technology, whether be software, hardware, anything of that sort, is that how can you make it more affordable, and how could you make it more easy to use, largely, right? So I think with the beauty of innovation in the smartphone segment is actually bringing the prices very down. So in a period of time, you'll see a lot, and any which way the feature phone usage is down. Even in tier two rural areas, people are picking up smartphones because they're really cost efficient now. You know, one. So I think what the challenge is that how do we approach the customer in a world of mobile? Should it be app based? Should it be a website or a page that could be more mobile sort of sensitive and should be open to? I think the split is between that. So the idea should be, as rightly said, right, by Manish as well, that we have to make sure that your entire digital banking experience fits in a 5-inch screen. That's what it has to be all about, right? And a lot of that has to be automated, right? I heard words like 3-step checkouts, right? Which is what it is. That's a reality, absolutely. And now how do we do that, right? If you got to enable a 3-step checkout and such quick journeys, right? You need to have stuff like pre-data fill-ups and or not only product aligned but backends also aligned. For that, I think a lot of reliance will go into technologies like AI and ML. A lot of work is already being done there. I think a lot of good ecosystem partners and fintech companies are coming on board. I've seen banks and other companies investing into fintech now, if not investing, partnering with them. So as I said, the ecosystem is fastly evolving, right? It will be about, you don't have to really do everything, as rightly said,
Or even buying them
uh,
over. I think it's not only partnering
absolutely,
with them.
absolutely. I'm investing, buying, partnering, whatever, right? So it's a good thing, right? The whole ecosystem is coming together to say that we've been fairly non-digital for a long time. We have both two things. One, we have audiences going digital globally. The buying, today 30% people of your actual sales funnel is buying, which used to be probably pre-COVID 15% or 12% in top countries like US, right? And that's a big jump, right? It took 10 years or a decade plus to actually get to a 12 or a 15%, and it took 2 to 3 months to actually get to a 30%, right? So that's how the digital pick up it. So now it is not an option, it's a necessity. And with the necessity, how can we, banks, other financial institutions, NBFC, payments, and platforms, technology platforms, software platforms like us, which enable all of this, how do we come together and say that, how can we make this whole journey easier, faster, more transparent, more automated, more data oriented? And eventually, I think if customer wins, we win.
Right. I'll come to Srinivas with a question. There are lots of audience questions that have come in. So I'm actually going to jumble up 2-3 questions and ask you one, which is that what is the big marketing trend to look out for in the BFSI space? What is going to be your marketing strategy for 2021?
I think the strategy is kind of evolving. One of the big trend that I see is in our industry, we call beyond 30 markets, the smaller markets. The digital penetration now where it is, we believe now that market has opened up significantly on the digital adoption side. So we are doubling down on those markets, which is beyond the top 30 markets. So our investments, whether it's for search engine optimization or for, a phygital kind of operation, we've now moved beyond the top 30. In fact, now we are lopsided. Most of our new investments that we are doing are now coming from those non-30 big cities. So that's the first trend that I see in the marketing spends point of view. Second, really big trend that we see is marketing automation. That's something Apurva also talked about. We are investing significantly on building data sciences, AI, ML, with help of players like WebEngage and others. More importantly, we're building our own internal data, mining capability with data marts. This is large investments companies have to do. Yeah, all along, people were very happy servicing the way things were happening, but today intelligence is becoming important. And as marketeers, we are doubling down on that part of it. So one is reach, second is capabilities in terms of research. And the last part, obviously, is the brand positioning. Over time, the brand positioning has changed from being very product focused, or solution focused. Now it's more about trust factors because the world is now a little more, difficult to navigate. People would like to trust brands which are more easier to accept. So you got to be there explaining how your brand actually takes care of the trust aspect. In our business, trust is very important. And
Yeah.
so these are some of the three key trends that I see will continue to evolve in 2021 for marketers to watch out for.
Thank you. And in fact, I would have liked to take this question to everybody else, but we are already 12 minutes over time. So unfortunately, we'll have to put a stop to the panel here. Thank you all very much for your time, Jasneet and the gentlemen. And it's been a pleasure interacting with you. Thank you very much. Please stay on and watch the
Thank you very much for taking the time out today. Thank you.
Thank you.
Thank you, everybody. Nice meeting you guys. Take care.
Bye-bye.
Same here. The pleasure has been ours.
Thank you.
Well, Alokesh, a very nice, invigorating panel to begin proceedings for the day after Kalpana
Very good one. I think
right?
the key, what's the key takeaway for you? For me, it was the idea of trust, and that brings us also to
yes. If we had more time, I would have liked to explore that. For the mutual
Yeah.
fund sector, look, ESG investing is the biggest thing, and that's all about trust.
Yeah,
Yes.
And trust has to come through the right customer experience strategy, which brings us to the next panel. Which is
Absolutely.
Great, right? So let's do that. Okay, so we now move to the second panel. The second panel is on converting customers into evangelists with contextual experiences. That can be quite a challenge in today's day and age of digital offerings and increasing competition and brand loyalty really going, diminishing faster than you think. So we have a fantastic panel again to take on this subject, and let's do the introductions. We have Dharmender Narang. He's the Chief Customer Experience Officer at IIFL Securities. We have KV Deepu, the President and Head of Operations and Customer Service at Bajaj Allianz General Insurance.
Join me in welcoming Ratan Kesh, EVP and Head Retail Operations and Service, Axis Bank. We also have with us Subramaniam Iyer, Senior Vice President and Head Customer Experience at DBS Bank India, and Keyur Dhami, VP Customer Success, WebEngage. Welcome to all of you. Alokesh, according to a study in 2020, more than 30% of consumers switched their bank providers in the past 6 to 12 months due to good competitive pricing, high customer service quality, or good value for money. In fact, the same report also states that 61% of BFSI customers expect to have access to more online interactions across their entire customer life cycle. Underlying the need, perhaps, for the BFSI sector to have, what the Americans call super fans among their customers. And in this context, how important are brand evangelists for you in retaining your customers?
Indeed, how important are brand evangelists, right? And brand evangelists can come from your customers, can come from your employees also, right? So let me go to Ratan Kesh. First, Ratan Kesh from Axis Bank. And Ratan Kesh, you can want to tell us something about brand evangelization. If we look at it, it's really a fancy word for word of mouth, right? That is what it used to be earlier. Your word of mouth promotion is what actually gets you the real thing. Now we say, okay, you're a brand evangelist, right? So, but has digital, experience helped create more brand evangelists? And what really constitutes a powerful digital experience that can create such brand evangelists? You want to take this?
Yeah, so thanks, Alokesh. Thanks, Suchitna, for this wonderful introduction. Glad to be here. So I think let me actually address the point starting from where Alokesh pointed out that employee experience is closely linked with the brand experience. So in today's context with COVID coming in, we saw two kinds of brand evangelists coming together and actually converging. One set of people have been that we actually had to operate our branches with 40% capacity because we had to maintain distancing, social distancing, etc. And we had to do tons of things with all the hygiene standards to be maintained, etc. So people who had to walk into the branches to get some basic services which they could not do online at that point to begin with, they were thrilled and delighted to see the level of empathy and the whole standard that we maintain in our branches. And it was very surprising for me to note that in just about 6 weeks, our customer experience score moved from 67 to 75. And that's actually phenomenal. It never happens. And that happened in the middle of COVID. So the human element, which we talk about as Axis Bank, as Dil Se Open, actually played out in a very significant manner. That's at one side. The other side, from before COVID, let's say BC world to during COVID world, DC world, we saw from a 60-40 physical to digital, it became 10-90. So our account opening moved completely online. We could actually do a video KYC based account opening. our service request transaction moved to almost 90% online. Now, because we had some of the journeys ready, the customer adoption improved and they could find the seamlessness of providing and getting banking services. And therefore their comfort and convenience improved the brand evangelist. So all of these went back and really spoke so high about the bank and the various services that you've been doing. Now that was still, we were developing a lot of products and we were fast tracking some of the journeys. So it happened during this COVID itself. So that's how I would like to look at it.
I'll take that cue to Mr. Narang of IIFL. You were in the previous panel, we were talking about the importance of vernacular today to reach out to customers. You guys were one of the first to launch a free markets app 6 years back, and also an early mover in exploring Indian languages on that app. So how are you creating evangelists out of happy customers?
Thanks, Sujita and Alokesh. So thanks for inviting me. I would like to add 2-3 things very quickly. Number one is, as you already pointed out, that we have been the very few in the beginning itself coming up with our market app. And we are basically very strong technology-driven company.
Yeah.
So that was the strength for us when we moved into COVID system. And we have 2 challenges actually, basically. Number one was where lockdown has started. Number 2, there was a huge crash in the market. At the same time, there was a V-shaped recovery where market has gone up. So, and to I think to add to it, then there was a huge inflow of new customers coming into the stock market. So there where the capability is being tested for us. And for us, what it has done is actually it has what I call it, adoption has become much faster. There's a huge adoption. If you talk about our market, IFL market today, it has 4.5 million downloads.
Yeah.
So, which is a huge jump. And people were open to any new technological advancement available. Earlier, we find that like we started with chatbot, very few usage. And that usage has gone up. Like today, we have around 1 lakh customer using it. And we in a month, and we have around 4.5 lakh messages being interacted with the chatbot. So that is the level of what you call adoption is there, and the speed which we are able to satisfy the customer. Now coming to creating evangelist. So I think that is the next level. So one is you adopt a technology, customer adopt the technology, and then when you are in sync, the expectation goes up. Now next expectation is to create a differentiation where your faster execution, your faster delivery becomes more important to you. So that is where we have been successful. We have a huge number of new customers joining in. There's a huge, though the market has helped, but the way that it has been adopted and the way we are able to see the spikes, and that is where we started interacting more digitally with the customer. If you look at chatbot, there was one interaction level was earlier it used to be only FAQ. Then we integrated in such a way that everything what he wants is available on that. And if it drops down, then you have an online chat agents available. And even if it is still required, you can create queries and all that. And what on top of it done is, because a lot of customers who joined was new. So what we did now is that we give them the suggestions how to go about. Suppose if someone wants to trade in derivatives, he has a guide, he has our products like Sensibles. If someone wants looking for stocks, we advise him he can go for advanced research, which is a product available with us. So we actually proactively engage and proactively tell him how to take it forward. So where that when you are able to create that bonding, that is where he find the differentiation. That is where he find the engagement. That is where you are able to retain those customers.
Okay, fantastic. Let me now take this question to DVS. The same question, and how do you deliver exceptional, experiences at every single touch point? How do you integrate the experience across things? And also considering the fact that DVS, it's been 5 years since you stake claim to be India's first fully digital bank, right? So you've got a lot of talking to do on this aspect. You want to just enlighten?
Absolutely, Alokesh. Thank you for the invitation, and good morning to all the fellow panelists as well. Yes, while COVID came in and it was kind of completely worldwide, it also provided opportunity, right? And Lokesh, as you rightly said, we were the first ones to bring in digital banking out here about in the year 2016, and that actually gave us a little bit of a head start, right? In terms of what do we have in terms of the customer journey, how do we digitize, how do we make it closer to the customer, right? I mean, all of us on the panel, all of us means in our friends and families, everybody got impacted, and there was a certain anxiety that people went through, right? And what it also kind of enabled is on two fronts. One is looking at it from the customer's point of view, the adoption, all of our parents and so on and so forth, the so-called the senior citizens and stuff, even the digital adoption has kind of grown multifold, and that has actually kind of given a blessing in disguise to all the organizations to kind of speed up and accelerate the digital adoption. I mean, probably at least a good 3, 4, 5 years is what people have traveled in this particular journey. What it also provides, what does the customer expect, right? I mean, in terms of a digital experience, what does the customer expect is security. The second one probably is reliability and dependability. How easy is the journey? And that actually, kind of adds up to the end objective of creating trust. Once you create trust, you are then, kind of able to get the customers back onto the app, and kind of they go back and use your products and services to ensure that the customers' jobs to be done are taken care. So that keeping the customer at the center, how do you get all of your journeys and everything, understanding what are the customer jobs to be done, and thereby kind of creating solutions is what we adopt.
Mr. Iyer, as well as Mr. Narang, both of you have mobile apps which look at creating a personalized journey for the customer by engaging more. But I'll bring this question to Mr. KV Deepu. So for the insurance sector, your biggest brand ambassador has been the friendly neighborhood agents, right? Who we always go to, who always comes to us to remind us about the premium payment, etc. So do you think they are your biggest brand evangelists as well? And do you think in this world, which is going largely digital, that perhaps this agent has outlived his or her relevance?
Well, Suchetna, you got your first part of the the question right, which is that the agent is the key distribution point from an insurance perspective. As far as your second part is concerned, no, agents have not outlived their utility. Agents continue to exist. The reason is, insurance is a push product, and it's a distribution-led business. So what has happened is during COVID-19, digitization has not replaced agents. Rather, digitization has enabled agents. When everybody was working from home and you had no paperwork, agents were enabled, so they could issue policies from their side. They could offer, customers, services from their side. And everything happened without any paper. Even when we had to train them, we sent across our training modules in the form of short videos over WhatsApp, so they would see those videos, understand how to carry out functions, and then get going. Now coming to the larger question, which Alokesh and you asked, in terms of how do we get customers or partners to become brand evangelists. One of the challenges of speaking last is a lot of points have already been covered by the earlier speakers, so I'll try and pick up something unique. We all know that the accent in the past has been on digitizing the physical, because everybody has had to do it. But now the accent is on humanizing the digital, because customers are increasingly coming back and saying that while bots and digital assets can be clinical and consistent, but they also need a healing touch. Because when customers typically call up a firm, they're not calling for a happy reason, right? They're calling because they have some issue to be fixed. So they need care, they need empathy, and they need a healing touch. So today, everybody is trying to see how bots can, mimic, human interaction. So which is why you see conversational AI coming to the fore, which is why, you're increasingly, hearing talks of man and machine coming together. So just to give you, maybe one example, from what we have done. In case a customer avails of our chatbot, and if the bot is not able to carry out the activity, because the bot is taught from all previous interactions, the customer is not asked to terminate the chat and then, maybe call up the call center or go to the website and then, state his complaint all over again. Instead, a human being takes over, and he carries it through, seamlessly to conclusion. And all these exceptional, scenarios are then inventorized, and then, we teach the bot. So the bot is all the time, learning. And if you look at customer NPS scores, NPS studies show that if you're able to resolve the customer's query in one single shot, the NPS can be as high as 96. Break it just once into 2 steps, and it can fall to as low as 65. So I think this whole idea of humanizing the digital, I think is the way forward for customers to become brand evangelists.
And it will be the day when customers reach out to you not with a problem, but just to say thank you, no?
That also happens already, because the digital world also makes it easy for customers to access.
Yes.
So therefore, we do get a lot of appreciation as well.
Fantastic. And Keyur, you are the man of the moment because you are the head of customer success at WebEngage, right? And what would these gentlemen and others in the audience not do to get that right, customer success? So give us some tips in terms of, what we are talking about here, and the role of a MarTech platform, to help accelerate campaigns, data analytics, and how can digital, when we are talking about a world where we are saying that there's too much digital, you need to have the human presence, don't forget the person behind the machine, right? How do you ensure that the person behind the machine remains relevant even with your kind of digital tools?
Sure. Firstly, thanks for inviting me, and good morning to fellow panelists and the audience. I concur with Deepu, where agents are not gone actually, in fact, there have been cases where we end up doing MarTech or engagement strategies for agents as well. Making them evangelists is important because India as a market is very agent driven in certain segments, not to lose out the consumers as well. I fondly remember, and I would like to quote a few examples which have worked for customers around a few years back. I think a couple of years back, I fondly remember one of the campaigns that was run by a brand, TSP, and that campaign was twofold. One was trying to give a user an experience of what they have done in the entire year, how they have done it against their peers, as well as there was a separate campaign being run for different set of individuals which were taking your funds from an agent. And in that case, the agent was also, there was a handle, a Twitter link that you was sent where you will thank your agent as well. So that's where the human element comes in. While you are sending out campaigns to individuals, you are sending very personalized communication to them, telling how they have fared against competition, like in general, whether they have invested in SIP, they have not invested, telling them pinpointed things, how they can better on their own portfolio. But alongside, if you are investing through an agent, you also thank your agent because he's the one who has led you out over there. So some of these human elements are very important. Even when we talk about integrations, and when we talk about planning any of the journeys or campaigns for any any brand, we also take into account what are the physical touch points, what are the touch points that are happening with the call center agent, and we ensure that we play well, gel along well with those touch points. It should not happen that your call center agent is calling a customer to helping you out fill a form, and on in parallel your MarTech platform is just saying buy this, buy that, doing some other promotion. You have to make sure where in the cycle, digital cycle, the user is, or in the physical world the user is, and ensure that all of these play along together. So it's very important to know these touch points happening in physical world, in digital world, as well as in an offline world that might be happening, maybe over a call center, and ensure that you have all of these binded together. And that's where we play typically a role in terms of that, making sure that we have a 360-degree view, and then how do we go around touching these consumer journeys.
Right. Keyur, you spoke about humanizing the digital approach of companies. Keeping with that, you cannot deny the human being as a storyteller and his or her impact as a brand evangelist. Look at what Richard Branson has done to the Virgin Group. Or, for example, how American Express or Singapore Airlines, they believe that their employees are their biggest brand evangelists. So I'll come to Mr. Iyer on this. Can Sachin Tendulkar do that for you, or do you think that your employees are your biggest brand evangelists?
So without a doubt, right? I mean, each and every employee represents the brand. So whatever you do, right? I mean, so, something that we have, you need those brand icons, no doubts at all. But ultimately, each one of us, each one of the employees, each one of the teams, that we have, they, for their own friends and families and for the people whom they know, they become the brand evangelists, for the respective brand that they carry, right? What we also do is, because of the huge workforce that we have, right? The most important, activity that we do in DBS is getting into a workshop which has all cross-functional teams to solve for a customer's problem, right? Or even if we are able to go back and identify or preempt what is going to come in, and getting everybody together, right from the tech to the the back end ops and so on and so forth, exactly what kind of Deepu also mentioned about. It is extremely important for all of these functions to go back and ensure that the ultimate output that you deliver to the customer in terms of the experience is co-owned by series of sets of functions, and absolutely each and every employee then kind of considers himself or herself to be the representative of the brand.
Okay, and that brings us to one of my favorite questions, which is basically how do you deliver the same kind of experience to your customers across all the channels, right? Because when somebody calls me, how do you ensure that a customer experience does not transform into a customer nightmare, right? Where the customer is bombarded with unnecessary and ill-informed telemarketers who don't know who they're calling, right? And don't know that they called me like 30 seconds ago, right? And of course, technology has a lot of role to play in that. But as the heads of customer experience in your organizations, how do you ensure, what kind of strategy do you follow to ensure that there's a dashboard or there's something to ensure that there's consistency, right, in how you're approaching the consumers, right? So, this question to Deepu, Dharminder, and Ratankesh.
Thanks, Lokesh. Sorry, you want to go first?
No, please go ahead.
Okay. So, no, Alokesh, it's a good question. I think why firms have various challenges, because you need to give a choice to customers, because different customers are comfortable with different channels. Some people like calling the call center, some are comfortable on WhatsApp, some are very digitally savvy. So it's always about giving a choice to customers. Now, how do firms or leaders manage a uniform experience? That was a query that you had asked across all these channels. It basically revolves around a few pillars. One is allocation, to pick cue from what you said. It's also about managing, right? Because you can only manage what you measure. So one is we take customer feedback when they have interactions with us. So whether it's the call center, rating the call, or whether it is through WhatsApp or whether it is through the app, they share their experience. When they share their experience, we know what are the strengths, and obviously we continue to invest in them. And we also know what are the focus areas which we need to work on, and therefore we do that. So you do that to continuously ensure that the channel is aligned to what customer expectations are. That's point number one. Point number two is each channel can be slightly unique, right? Because call centers, for example, work on IVR, right? You have to basically go through before you connect, right? Some other channels maybe one-to-one, right? So then you also have a channel specific strategy by which you try to maximize the effectiveness in each channel, because you can't compare channels beyond a point. We need to ensure a uniform experience, but you can't compare experience of each channel beyond a point, because each one is slightly unique, and that's the reason they exist. If they were common, then why would you have two different channels, right? They exist because they are unique. So then you try and measure it like I said, and then within that channel you fix the features. So these are two things that we do. The third thing, and I'm digressing slightly from your core topic, how the omni-channel experience helped us, especially when COVID-19 happened, was when suddenly call centers shut down, had these other assets not been offered, other options not been offered, then we would not have been in a position to offer uninterrupted service to customers. That's also a way by which we had to ensure uniform experience, because call center customers overnight migrated to digital assets. And you will be pleasantly surprised to know that at that time, our customer complaints fell by 90%. So if a customer complaints fell, it meant that they were getting as good an experience as the call center, or an even better experience with digital channels, because we had built those journeys. So I think that is proof of the pudding, that we ensured a uniform experience.
Just to take it forward, where
Yeah.
Deepu has left. At IFL Securities, okay, I completely agree with the Lokesh point that consistent experience across channels is very, very critical. So first thing, whenever we look at any new initiative, which is going to be offered, the first thing is how to keep the experience without disturbing the overall setup. So the most important is our platform where we have a relationship management, which is connected to every channel. So it is the same. So there is only single client for us. Whichever channel he comes, we know the history of the client. So whether the agent is handling, whether the online chat is handling, whether it is our system is handling. So he is able to see the complete history. So any interaction level, whenever he comes, that we know what has been done on the back end. So every channel is connected to single platform. That is the strength of the omni-channel, what we talk about. Therefore, if even if he has interacted previously on chat and then raise a query, we know what the interaction has taken place and what is the issue raised. Similarly, if he has moved to probably chatbot is not able to answer, he moved to say online chat agent who is taking the handover. Still, we know the case is getting created in the same CRM system. So everything is a single point of contact when we are responding to the client. So that helps a lot. Similarly, whenever like now we have started earlier, we started with chatbot. Now we have introduced WhatsApp service on WhatsApp. Our channel remains the same. Our core remains the same. So everything again getting integrated to one relationship management system, so that we are able to track and we are able to understand where the customer is coming from. And just taking it forward with say, okay, I think no digital channel can replace a physical human being. But the most important, how it has helped us over a last period, is that it has taken over the scalability part of it. See, client is coming with a pain, but if you look and analyze, more than 60 to 70% are not actual pain areas. It's more of a educative thing, more of a information gathering, more of a where he's not able to access things. So how that is where your simplified UI, simplified interactions, tree-based solutions helps you, where you are able to give him basics. When there is a pain, then your agent is available who is able to give more time, more bandwidth, and give him a more satisfaction to it. So that is where the digital and the physical agents gel in. So if you have to improve, you have to hit the core. Earlier, what was happening, your major part was getting choked just to guide the client. So that part has been taken care of completely by digital. So nobody will come to you because how to access this, how to get my report, how to get, everything is available. So I think it is same for every organization because these are basics. But how to take it forward where actually customer gets a pain, then your agent has to be there to pacify, to take it over and give it a next level of satisfaction where you call it delight.
I'll take the same question to Ratan Kesh. Your inputs when we talk about customer experience in a phygital world. How do you maintain uniformity in ensuring customer satisfaction between the physical and the digital world?
Yeah, there are two parts to this. One is the internal to the organization. Internal would mean employees, technology systems, and the channels. And the other side is actually have the customer. So what happens is that most often in the pre-COVID world or in a less digital world, you would have designed journeys which are meant for a physical channel separately, for a different call channel separately, and for example, an internet banking, mobile banking channel separately. But what is happening more and more, and which is our endeavor, today you actually create the journey as one. For example, if you want to change an address, I have got one single journey. You want to change the address by coming to internet banking, use the same journey. You want to do it on the call center, the agent will do on behalf of you. And if you go to the branch will actually use the same journey on behalf of the customer, which essentially means there is a seamlessness in the journey which you create. So that's one digital asset that you create and render it through different. That actually essentially ensures uniformity. That's at one level. And I think all the other speakers, they spoke about saying that whenever you are actually having any interaction with the customer, ability of an organization to capture the interaction at every single touch point is important. So we are building data lake wherein if you come to a chat, there is an impression created for the chat. And then if you go to call center, he or she knows that you tried doing something in chat and you could not get it. And therefore the context gets carried forward from there on. And that's something very important. Now, quickly to address what Alokesh mentioned about the marketing calls. And I think that is something which is very, very important. And we are finding in digital world, people are sitting at home, the marketing agent, the sales guys, they constantly keep calling. Now, there again is very important to have a very strong data warehousing capability, with which product the customer is likely to buy, make that call, and then the closed looping is very important. If the customer said that, no, I don't want PL, don't make the call second time. So that closed looping is happening more often, which is where I think tech partners are playing a significant role. So the fintech and banks are working together to make it happen. Let me just make one last point of how we are making things very, very simple for customers. Like for an SME loan, previously you needed to fill in lots of documentation, give your banking account statement, proof, etc., etc. Now that has become so seamless. We can do it 24/7 in the internet banking or the mobile banking. You just key in few data points, put your GSTN number, and ping from the GSTN side. You can pre-populate everything, do credit rule engine instantly, and actually give the loan instantly to you. So that's the power of technology which is coming in, which is not only to improve customer experience, but also really creating brand evangelists in that sense.
Okay, fantastic. And Keyur, there is a question that I had for you, and there is another question from the audience which sort of matches and adds a little value to it. So I'll ask you both, right?
Sure.
And essentially, this whole thing about the customer journey, and because you are like WebEngage, a digital tool that helps organizations, BFSI organizations, retain customers and give them good, journeys, right? How can you help understand customer journeys to craft a life cycle marketing strategies and hyper personalized kind of experiences, right? And that was my question. And I'm just coming to the audience part, which is basically customers are also very security conscious, yet they want contextual communication, right? So how then can you go ahead with collating data for personalization?
Right. I think some of these points have been touched upon right now with the current audience, current panelists. They mentioned about creating these data lakes, so to say, where interactions from different points, be it digital, be it physical, that are going in the same data lake. We more often than not connect to the same data lakes in order to fetch information. But I might not require the entire information. I might just require some metadata when it comes to security. So I'm answering both parts right now. So I don't need the exact information that has happened, interaction that has happened when it comes to a marketing perspective. But I definitely need to know whether it was a happy customer, it was a sad customer, whether they were interested in personal loans, like Ratan mentioned, or whether they were not interested in a personal loan. Getting that level of information that is required for marketing to then promote certain products or not promote certain products is very important. So I don't need the exact chat that has happened, but I definitely need to know the metadata about that particular chat. And that's what we try to break silos. So more often than not, banking and the BFSI segment has a lot of data. It's just that we need to get the data which is relevant for a marketer, relevant for a product-based communication into our platform, so that while we don't breach on the security aspect, we get data that is required just for the personalization or humanization of the communication to happen. And that's a part of what we do within our onboarding practices, where we tend to understand these different touch points, tend to understand where are they going into, be it a data lake, be it a CRM system that are being used, and then utilize that to get that information into the hands of marketer, only the relevant information out of it.
Right. I'll take one question to Mr. Iyer. The work actually of an evangelist is basically storytelling, but it has to be also through omni channels of communication for your customers to get it. So how do you use an evangelist or a storytelling or a story across to your customer?
So I'll just answer that in a moment. Just I had one related point to what Keyur mentioned. I'll just touch upon that for 30 seconds and then move on to your question. Whatever we discussed so far is what the customer states, right? I mean, in terms of customer interaction and so on and so forth. But what technology, what it has, kind of enabled all of us is the amount of time spent on the app on each and every screen, right? So for example, if there is a drop, customer is buying a personal loan, for example, customer is dropped. What do you do? How intelligently do you, kind of capture that as a data and go back and solve for, right? I mean, there could be something wrong technologically, or there could be, something wrong in the way you communicate to the customer, right? And communication, even in the digital framework, is so very critical and so very important. We spoke about data lake. There is abundance of data that all the organizations are able to put together through customer interactions, through whatever is happening on the app, and capturing the customer preferences. Once you put all of this together, you have an extremely strong backbone that you are able to fall upon and to create what does the customer really, really want. So moving away from the products and services that we offer, and to kind of provide so what are the customer's jobs to be done? Because chahiye kya customer ko, right? I mean, so gone are the days when all of us, we used to accompany our parents to walk into a branch of a bank, and that typically used to happen on a Saturday and stuff like that. But you provide all of these channels, all the availability across all of these channels, and then leave it at the convenience of the customer. That to me is extremely, extremely critical, and that is where the customer also has evolved. It is extremely important for all of us as organizations to align to what the customer requires, and that is where you will clearly be able to strike a chord.
Fantastic. And we're almost out of time. In fact, we're actually out of time, but there's one rather interesting question from a member of the audience, which I will take to the panel, and then we'll wrap up. And this is Dr. Mrityunjaya Rao Mangipudi. He's an adjunct professor at the Mallareddy University in Hyderabad. And of course, he starts with saying that maybe it is out of place to ask this question, but Professor Rao, it's never out of place to ask a question. And he says that in this context of creating new brand evangelists, can somebody tell him, because he's a professor in this university, in what way the academia or higher education institutions can contribute to this objective? Is there some way, any scope for universities and those who bring in the next generation of the workforce to create brand evangelists at the campuses itself? Anybody wants to take that question?
Can I take that, Alokesh?
Sure.
Yeah, I think it's a good question, and also happy to see academia wanting to contribute to this. So I can think of 2-3 ways by which academia can contribute. One, firms do a lot of projects, so academia can get involved. Students who can come in for assignments and then contribute. That's one. The other is when we look at the way curricula in academic institutions evolve. They should be agile enough to pick up a lot of trends from the corporate sector, including topic like this, and then include it in their as a module, because then you can make it much more structured and institutionalized. So these are 2 ways I can think of. Right. And the third is that if they get involved in discussions like this, they can be cross fertilization of ideas. So I can think of these 3 ways right up front.
So let me get a couple of more pointers where academia can help. Look, first of all, getting customer information and really getting the true experience of customer is something very, very important. Students can actually garner that by talking to the real customers and give lots of insight to the institution like banks, what products the customer would like, what services they like. So that more of less of that feedback that can come through from them. Second, I think recently I came across a course which is called BBA Customer Experience. And I think that to me is a very exciting sort of step being taken by some of the institutes. So if one can design a course on how to BBA on banking experience or a customer experience or AI and ML, I think some of these courses can be done jointly between the bank and the academia, some of the universities, and we can co-curate the program and really create sort of incoming employees who can then be adopted in the companies who are already way ahead in the journey of understanding technology, understanding banking, understanding experience in banking.
I'll take that question to Mr. Narang. Forever our government and regulators have been talking about how to tap into household savings and ensure that money pours into the equities market. But perhaps for that, education has to play a bigger role, right? And when we get out of school, we do not know anything about the financial markets or the instruments there. Maybe a course on that, maybe a subject on that, even at the +2 level.
I think you are at the right place, the way you started it, because I was just about to contribute the same. Because there's a lot of initiative taken by, actually, no denying that. They go to the investors, do these shops, workshops. But if you look at the from ground level, that education is still not there. If you look at the If you look at our education system, till the time you're passed out and you have the interest in stock market, you will never come to know what's happening there. So we have seen this small change coming in because of digitalization and a lockdown. The generation Z who is coming into the market, but there is no formal education happening at the initial phase. So it could be a part of probably someone doing a particular stream of education. So he will come to know. At a general level, at a board level, people or the students are not given any education in terms of how investing should be done, how they should plan it. So everything, every generation is moving so fast. They are probably coding, they are learning from probably sixth standard now. Okay, so nobody takes an initiative saying that how to teach them how to invest, because you know that it's always compounding which helps. The early you start, the early you gain, the more you gain. So those concepts are not being taught. So that is where there's a big gap between the two, and somewhere that has to come into picture, because you can't leave it to SEBI, you can't leave it to exchanges to do it. Somewhere that has to come into curriculum how to do it, because it's a much bigger thing to do. So they have to understand before they step into the probably in the corporate world. It could be any of the field they adopt. End of this day, their saving should be intelligent. They cannot learn after they join. So they should know their what is the right strategy they need to adopt. So that is where they will make money, they will create wealth, and that is where the probably the country will go into a different level or two.
Yeah, thank you. In fact, power of compounding reminds me also that my home loans maybe itna compounding ho gaya ki, it's really now beginning to what I'm supposed to pay for the house. I ultimately end up paying 3 times for it, over a 20-year period. So anyway, thank you, gentlemen, for joining this panel. It was really wonderful having you all with us. Thank you very much. Please stay on for the next panel that we are going to have on technology. That's also going to be very relevant to you.
Thank you very much for taking the time out to join us today. Thank you.
Thank you so
to
much.
everyone.
Thank you, everybody. Thanks a lot.
Well, coming up, Alokeshda, is the last panel of the day. Here, I think the resounding thought that came out is that while we adopt digital, we have to humanize it somewhere. That is what people want.
I think it also calls for certain, simple things like, if I, all of us bank with multiple banks, right? So do I. So one of the banks, I'm not taking any names. One of the banks I called into the call center, I went round and round in circles in the IVR and ended up coming back to the same place without finding my way. And there's another one which I called and they gave me two options straight away. Do you want to go to our IVR? Do you want to go to a person and ask a question? So, right at the outset, you get that. That's just brilliant, right? It's such a simple thing.
Yes.
It's absolutely brilliant. So, technology used the right way. That's so very critical. And that brings us to the technology panel.
Absolutely.
Coming up next. So fantastic. Now let us go to the final panel of the day, which is the importance of customer data platform in the data age for BFSI. We already spoke about data lakes. I think you referred to data lakes. We'll talk about data lakes and CDP and data warehousing and stuff like that today. And technology is paramount, of course. But like I said, it's not only about what technology you deploy, but how you use it.
Yeah, indeed. If AI, ML, data analytics, and all the big IT stuff cannot stop a telemarketer from calling you once every day for the same product despite your refusal, then we're surely not using the right power of technology or using the power of technology the right way. And as we know, BFSI industry is closer to the consumer than any other industry in India. So here are our panelists for the final session of the day. Join me in welcoming Samir Nigam, CEO and founder PhonePe, Subhash Kelkar, Chief Information and Digital Officer, ICICI Securities, Sharat Saxena, Chief Technology Officer, Bank of Baroda.
We also have Kirti Patel, Joint President and Chief Technology Officer of Kotak Mahindra Life Insurance, and Ankit Utreja, the CTO and co-founder of WebEngage. Welcome, everybody.
Welcome to all of you. And let's straight go into the discussion today with without much ado. So, everybody has the technology. So my question is that what makes the difference between a good balanced strategy and perhaps a strategy which is not that good, which is all over the place? So I'll ask that question to Kirti and we'll take it around as we go ahead. Kirti, to you. You're on mute, Kirti.
Can you repeat the question, please, Suchetna?
Sure, sure. I was asking that, we have, all of you here, you have technology, but how do you use that, and how do you ensure that by using it, you make the difference between a good and balanced strategy and a strategy which is not that good?
See, technology is a given. Okay, without technology today, really, you can't talk about any kind of customer service. And I was just listening into the earlier panel, and that was not a panel of technologists, but everybody touched on technology. Having said that, right, we are not a technology organization. None of us represent technology organizations here, perhaps other than WebEngage. So for us, it is not. I mean, we can't say our objective is to implement a technology. First, we need to identify what is the business problem that we are trying to solve, and then choose the right technology. Only then we will be able to give the customer what the customer wants, or the businesses what they want. So good marriage between technology and business is absolutely imperative. We do not measure the success of technology alone. If it has not delivered business results, then for us it is a failure.
Right. And, yesterday, Kirti, you were also mentioning about, how, for example, in insurance company, there is a very transactional nature of the relationship with the customer, right? So how do you take that relationship from a transactional level to a more engaged level, and yet not get too under the skin of your customer, right?
Not
So
irritate the
how do you do
customer
that?
too much.
Yeah, so you see, I'll tell you the difference that between an insurance company and perhaps a bank. Uh, Typically, a life insurance customer would reach out to us maybe once a year. Typically, if he has chosen annual premium payments, even if it's monthly premium payments, they would go on an automated way. Whereas in a bank, the interactions are far more. Okay, maybe I don't know, maybe a couple of times a week at least. So for us, the first challenge is really the contactability, because if the customer is not reaching out to us, and customers do change their mobile numbers, their email addresses, how do we ensure that we have the right kind of contact information with us? So therefore, what we do is that, and the other thing is that there are multiple stakeholders which reach out to the customer. There is the life insurer, there is the distributor, there is the agent. They also reach out to the customer, and they also may get hold of this information. So what we do is that we've built a platform where all this information that is collated from the customer, the contact information, is available in one place, so that even if an advisor has contacted a customer, got to know of the recent customer contact information, we use it when perhaps our contact center is contacting the customer. So that is the one thing that we do.
Okay.
You see, the other thing is that we really need to have a comprehensive customer data platform, and I think in the earlier panel also they did talk about it. And some of the challenges that one needs to overcome when one wants to build a good customer data platform is that, see, our applications have been built over a period of time. Our core policy admin system is really a legacy app, right? So how we need to ensure that all the data is collated in one place. It is standardized. So it is very important to have a data dictionary, so that we know what is the data that we are collating, and then we are able to mine it, run some analytical tools on it, give intelligence to the business, so that we don't call Alokesh 3 times a day if he has taken 3 policies from us. So that is where we say customer has to brought in the center of everything. So the customer data platform needs to look at it from a customer point of view, not an internal point of view or from a transaction point of view. The
Right. This
other
has
thing
become
is,
my
yeah, sorry, go
I
ahead.
mean, it has become my pet peeve. Not only for policies that I've taken, but even for something that I've not taken. People are calling me, twice within 30 seconds of one call. So I'll come to Samir on this. And Samir, many congrats to you. PhonePe has been doing phenomenally well, and I have personally been a little surprised, but pleasantly so, I must say, at the progress that PhonePe has made in such a competitive market, right? The space you operate in is phenomenally competitive, and yet you have made good strides. How do you ensure? And that space is also becoming commoditized as we go on, right? It's almost like, yeah, I can go through Beam, I can go through PhonePe, I can go through Google Pay, I can go through whatever. As long as I can transfer the money, it doesn't really matter. So how do you create a brand value in that kind of a environment, and how do you use technology in the right way to reach your customers.
Thanks, Alokesh. I think there's two questions in there. One is how do we actually create brand value? Second is how do we build engagement? I'll answer the second first because I think when we entered the payment space, one of the discussions we had to have with all our marketeers, all of our product managers is you're not building Facebook or Instagram. You're not building a news channel. You're not building a daily hunt. Inherently making payments, if you're going to replace every payment that's done with cash by a digital payment, it's a utilitarian way of life change. You need to get in and get out of the customer's life as quickly as you can with the highest success rate you can. So don't pretend to be something else. I think the best way to think about this is when we build our products, we never want a customer to have to call us because they had an issue. We never want the customer to even be able to attempt a payment they can't make. And in fact, the secret sauce for us has been, and now I'm happy after all these years, NPCI is publishing the data, our success rate end to end is the highest in the industry and has been for several years. So while there is Bheem and there's Google Pay and there's an Amazon Pay and many others, in a commoditized market, just like in telecom, people know which network works well. In payments, people know when the payment success rate is going to be the highest. Your brand equity is going to be built the really hard way in an industry like ours. When you're throwing cash back at problems, you are masking those problems. So we don't give cash back. In fact, if you look at our customer feedback, the one thing that people ask us for is more cash back, and we, as a policy, we just don't do it. Because we realize that you will never know where you land with a customer in their lifestyle if you don't take cash out of the equation, right? I can't subsidize your brand equity, or rather your brand love for me. So I think you need to think about it differently depending on the context you're in. I think Kirti gave a great example. When we look at our insurance products today as a distributor, insurance is a matter of solicitation. You have to reach out. So the best you can strive for is to reach out in a non-irritating way. But to assume that people will suddenly start buying life insurance, I don't know any human being who's ever woken up at 8 in the morning with a cup of tea and said, let me read the newspaper and buy life insurance. I want to meet such people, but I don't know them. So that category on merit is going to be more about proactive engagement as opposed to being passive in the background. I don't want you thinking about phone pay as far as payments is concerned until you have a payment to make. That's not the job of a payments company. So you have to actually craft a customer strategy based on what you're trying to do. You should be out of par if you're a commodity utility. Nobody ever calls up their electricity provider or their gas provider until you're running out of gas or the electricity trips. That's a great engagement. If you never ever have called your electricity provider, they've done phenomenally well. That's the right way to think about it. And I think that's the way we think about it. In terms of customer data platforms, I think we are a little fortunate because we are a digital only tech company. We have a live engagement digitally with all our customers today. And I think that helps. We have multiple communication touch points. Second, all inbound requests are coming through the chat as well. So you'd be surprised to know 80% of tickets on a phone pay today initiate and terminate on the chatbot. It's a multilingual chatbot, 80%, and I'm talking millions of queries. We do 1 billion transactions, just payments, so you can imagine that millions of queries. So I think again, using the data to actually build solutions so that no one realizes that you build those solutions and make their lives better is the way to go. If you start using data to annoy people saying, I know who you are, therefore I will spam the hell out of you, you've lost the plot already on day zero. There's too many options for everyone in every category. I think the world's changing, and I think smart brands are getting with it and understanding that we have too many signals coming our way. Push doesn't work all the time. You need to create pull the right way.
Right. From one of the youngest companies on the panel today, let me go to one of the oldest. My question is for Mr. Sharath Saxena. The third largest bank among PSBs, your customers are over 130 million, right? So with such a large pool of customers, how do you utilize, or how do you combine your technology weapons to ensure that you're engaging with your customers beyond just a transaction?
Thank you, Suchetna. And hearing Samir talk, the way he was describing his company,
Yes.
it looks that I am coming from Indus Valley civilization.
A lot of us feel that way.
We are a 113-year-old bank,
Yes.
and we just amalgamated two banks which are over 80, 90 years plus. And that is where we stand. Having said that, I think I'll go down to very basics. What Samir said was that his interactions, he's
Some
lucky to
noise in the
have an
background. Can I request
institution
others to
which
mute your microphones, except Sharad? Can everybody mute your microphones? There's some noise in the background coming from somewhere. Yeah, Sharad.
Yeah, thank you, Alokesh. So he's lucky to be heading the institution where inherently the data is collected in a digital form, and since it's collected in a digital form, it's very rich in nature. It's very in right formats and all. We have a lot of legacy, and to my mind, the first thing which should happen is that in a bank of our size and our vintage and institutions of this nature, people have to understand that putting a layer of whatever you may call it, a data lake or a customer data platform, is not going to solve the problem. You have to have inherent processes in place, inherent quality of data in place, and then look onto these things. And what I'm alluding to, let me tell you, you said that you started with a discussion on one person getting multiple calls from the same institution. Now that basically gets down to the deduping of your customers within your own organization.
Correct.
We got in Dena Bank and Vijaya Bank into this Bank of Baroda. We had no wherewithal to dedupe them when we were bringing them in, because our primary purpose was to bring them in and be one bank. Even not going there, do we have that sort of deduplication within our organization? It is not, because the way we grew over decades, we grew as different in an organic manner into different businesses, and that is not there. So what I'm trying to come at is that institution like ours have to have a very hard job to do. Just putting a layer will not help. They have to get down to the basics, see the data quality. Data quality is paramount in such institutions, because data quality is pretty poor, both from the customer standpoint, transaction standpoint. There are various formats. There are enough and more data elements missing, and that is where we get into all these problems. Having said that, we are one of the pioneers in public sector banking environment, where we have gone in for a big data lake environment. We have gone in for CRM. But again, my emphasis to my business folks is that having these layers is not going to help unless you have fundamentals in place.
Absolutely. And in fact, I am actually personally very proud of all our PSBs, not Bank of Baroda, whether it is SBI or some of the other banks, who have actually surprised us by doing digital the right way, and having done a lot of digital stuff along the way. I've been like an SBI customer for God knows how long. You can make it out from my beard, but
no, but the challenge there, Alokesh, perhaps is that for a bank which started out when in 1910 or 1908, right, for Bank of Baroda. So it's not only the fact that you are a vintage bank, but you have branches in every nook and cranny. To take all of them together towards the technology journey, I think, is the challenge, perhaps.
Absolutely, and bringing them all together, and which is where the cloud technology also, I think, plays a important part. And so, Subhash, my question, to you really also is around this whole area of how do we lift customer relationships using the right technology in the right way? We are talking about data lakes and things like that. But you also tell us, because as far as I know, banks have not taken their entire IT infrastructure on the cloud, right? There's still a split between cloud and on-prem, right? So what is the right kind of balance between split and on-prem? Because you see a lot of digital native companies, I don't know about PhonePe, maybe you're all entirely on cloud, and there will be others who are probably entirely on cloud.
You're saying you're not...
You're not on cloud at all.
No, so you're asking me, let me tell you, I mean, I don't have a great use case as of now to go to the cloud. And I'm being very candid about it. Why should I go to the cloud? I have my own data centers. I have my own installed infrastructure, compute, and everything available. I have my private cloud, which provides me enough and more agility. We are a heavily regulated industry.
Yeah.
You have to be very circumspect of what we are trying to do, unlike many other players who are just in the fringe spaces. So not that we are averse to it. The point here is it has to make a good use case, and when you get into it, it's not just that you want to. It has to be seen as a strategic, directionally important decision. Because why I say this, just going to the cloud for an institution like our size is a humongous effort. And should something go wrong, coming back is enormous. People don't think about that. And we have to think about business continuity. We have to think about the regulatory impact. All these are very important things. I mean,
absolutely,
going to the cloud and cloud enablement has become a cliche. But as technologists, keeping all the jazz aside, when we think about it, it should be a very well thought out decision on entry and exit plans.
Absolutely.
And what ROI do we get out of it?
Yeah, we'll quickly go to Mr. Nigam before we go to Mr. Kinkar.
Sorry, I want to actually do a big plus one on what Sharath said, because so I was actually saying that we don't have anything on the cloud. We actually don't. People might find this surprising. Again, if success rate is what you're solving for, whether it's banking or payments or any of these systems, you will have to handle spikes. You will have to handle scale. You will have to handle for localization. You need to handle DDoS attacks. This is people's money. This is people's data. People always ask us, even on our board today, our investors ask us, why aren't you on the cloud? Well, two problems. One, I cannot guarantee the end-to-end security of systems if I don't control the systems. Anyone telling you otherwise is lying. So then you get into phase two, which is the risk-based approach. If you're taking a risk-based approach, the regulator and you need to be on the same page. It's a regulated industry. So if I was not building PhonePe, if I was building Daily Hunt, I'd be on the cloud because there's a lot of content consumption. We use CDNs to deliver banners, but that's not the consumer application part of it. That's just ads, right? Very, very different. So I think it's important that, again, we take the industry context here. And I think the second thing is, and I love the way Sharath put it, when you think like a technologist, you don't buy into a fad. CEOs at banks and insurance companies and others, and I talk to many of them, I think have this like target on their head from the public markets or their board saying, are you talking about the cloud? Are you actually building big data lakes and whatever else? A technologist will tell you any day of the year, having harmonized, clean data sets has nothing to do with being on the cloud or not. Getting really clean data updated across all your branches and whatnot is about building integrated end-to-end solutions. You're better off doing it in-house if you have the chops. I think the gap today is that if you see most technology startups and what are called fintechs, insurtechs, payment techs, they're led by technologists who are trying to understand the dynamics of the industry. Most institutions that are like large banks, insurers, and others are led by fundamentally sound bankers and insurers. That's why they don't bleed cash, we bleed cash. We are learning the business, they're learning the technology. So I think it's more a question of who ends up learning the other side of the world faster. That's where the world converges and the market will actually like consolidate.
Subhash, it was a rather roundabout way to come to you, but yeah, your view on this and on the customer experience part.
Yeah, I'll take both the things. So first, let me start with the cloud or not cloud. Okay, I'm open. We are open as ICICI Securities, And we know that both the things have their advantages and disadvantages. So we need to use it for our benefit. For example, cloud has the elasticity component in it. So if the load increases the next day of the budget, you would be able to, you will be better off if you are on cloud, to handle that extra load for just a day or 2 or 3 days. And thereafter, you just take out the things and you are only paying for the usage you are doing. Okay, the cloud has that flexibility, and especially for our kind of business where people come because of sentiments. They are selling based on sentiments. They are selling based on certain news. They are selling based on, or they're buying or selling, or they're doing transactions based on certain environmental factors. We tend to benefit from cloud. And as you would observe, our peers are mostly on cloud. It's so we are not averse to cloud. And the more important point for me, rather than going on cloud or not, I think I would agree with the PhonePe that your quality of data matters a lot. It is very important that you first get your house cleaned up in terms of a sleek end-to-end view of 360-degree view of the customer across multiple channels. Are your systems capable of doing that? First, you need to ask that question. And the difference between nudging and irritating a customer. Every time the customer is nudged, he needs to feel the value that, yes, I'm nudged and this is the reason, and you need to do some proactive thinking in terms of, nudging at the right times rather than nudging as usual. So if you see, there are apps which are giving thousands of messages every day. You start ignoring those after a time. And there are apps who give you messages like Cred. You look at the example of Cred. They don't give you too many messages. It's a very muted app, but you still love it. You still end up loving it. Customers should feel like, you are being contacted. So if I have a risk profile and I'm buying a share against that risk profile, am I getting warned about it? It is in my interest, right? What's in it for me? Is that question answered? So I think for me, more important priorities are, rather than cloud and other things, cleaning up that data and making the house in order in terms of being ready to leverage this data across various channels. And then maybe build, AI and ML programs to, go for suggestions, advice, robo-advice, rebalancing, whatnot. And basis the news that you get from different corners of the world, I think suggest some plans for investments. And these companies would benefit, that companies will benefit, have some thematic investment plans, and then go for the right customers. And, there is a huge scope in a B2C space for us to, play. And it's immensely important for me to get that data in order first. So that would be my answer.
Okay, I'll go to Ankit on the topic that we started out talking about, which is that how do you use technology to really lift your engagement with your customers?
No, a great discussion. I think some of the points touched by Sharad and Kirti in the beginning, right? How do you use technology? I think important is to understand what are the business goals and how is the organizational design looks like. Because organizationally, all these functions who are trying to achieve the business goals needs to be aligned with the solutions that are getting deployed in your. So technological, I think, advancement or the adoption happens in all the organizations, whether these are new fintechs, the way Samir explained. They are all on-prem. It doesn't matter to them. They are able to take care of regulations. They are able to take care of the scalability as well. And when you talk about Sharad's setup, right, it's 110 years old. And when you talk about the technology adoption to increase the experience, to make the experience much better for customers, there are three different things that comes into picture. One is how your organization is designed. When you define the business processes, who are the owners? We are discussing about CDP, and we also touched base about data lakes, right? Both are the terms which are used and abused by people like cloud providers and by people like us. And there's always a confusion, whether I can solve this problem using a data lake or I can use this problem using a CDP. Do I need a CDP?
Stole my next question.
Yes.
So do I need a data lake for solving this problem? And now the answer varies a lot, because when you talk about data lake as a technology concept, it's just a black box so that end users in the organization don't need to worry about where the answer is coming from for their queries. And the queries varies a lot, right? It could be very transactional in nature. If my agent is walking down the street and is meeting an end customer to just check about how the loan repayment is going to happen, he needs to have the entire information about that particular end user. What is his CIBIL score, and so on and so forth. But you can roll it up at the business level, you can roll it up at the organization level, at the branch level, the same information. And the need and need varies from use case to use case. And depending upon who the business owner is, what the business process looks like, and what the data, where the data resides, actually changes a lot many things. In that perspective, when you talk about data lake, it becomes a one-stop solution for everything because it holds everything. But can it answer all the queries? Can it power your real-time engagement? It may be answering 80% of your analytical queries. It may be replacing a warehouse kind of systems, but is it doing transactional? And on the other hand, when it comes to CDP-like platform, does it need to have access to all the systems? Like in the previous panel, they were discussing about how do you care about securities and all of that. Now, marketing needs may not be too deep. What is the depth of the marketing need? Do they need all the PDFs that have been uploaded by an end user for their own loan processing? They don't need probably the PDF details. But all these PDFs are uploaded and the documentation is uploaded in your own data lake for other business processes. So defining who the processors, where the data boundaries lie, and what is the right solution is one of the aspect of designing a solution. And second, obviously, is the time dimension. When we talk about data lake, or when we used to talk about warehousing, now data lake, and now CDP, we will keep on talking about new terms every 5 years or every decade, so and so forth. But the time dimension is something which people are not able to crack it in a better way. You can see things from your eyes. These are the facts, these are the data, this is how it should be laid out, and we'll deploy a technology solution. On-prem, on-cloud, doesn't matter. But with time, things change. And technology to adopt those changes is very, very difficult. And that's where the second thing comes when you deploy solutions. And you need to design solutions with that perspective. And third is obviously the whole user space varies a lot. I think Sharad was explaining the merger of banks. How do you identify users? Beyond that, from the marketing solution itself, we take care of merging user base. So all these consumer apps, consumer businesses deal with the end consumer from the beginning of their journey. When they're anonymous, they're not revealed identity. They have not procured anything from the bank or the insurance company, and they have not probably signed up as well. From the beginning till the end, we do a good job of stitching the entire story. But then, other than the technology solution, there are real life solution problems as well. The guy who left his phone number in the mall when he was applying for a loan was phone number at that moment in time. It was only the phone number which was an identifier for that user. And the loan team in a big financial institution created a user out of it, and they have their own life cycle. But it turns out that the user is already a registered user for some other business aspect in the same company. How do you make sure these merge together, and how do you provide the single experience? And that's where some are real life problems that you need to take care of. Some are technology problems, some are business problems. You need to understand where the business problem is and what the technology solution needs to look like.
Yeah, there's a lot of having accurate data is perhaps the most important thing, because I and my team, because we are always interacting with leaders like yourself, we also have databases, right, of people like you, and we know that what's Samir's email ID, we need to invite him for something, and tomorrow Samir decides to give up on PhonePe and start something else, and my database needs to be updated, right? And after every 2 years, I know that 40% of my database is gone, right? There's nothing in it. It's going to bounce if I'm going to send a mail to everybody. And and it's really so difficult. And mine is a very simplistic case. It's just an Excel sheet, whereas the kind of data that you guys handle is like phenomenal. So obviously that is one of the challenges. But Kirti, is that the primary challenge, or there are other challenges also? We are talking about CDP, data lakes, data warehousing. People are still confused about, of course, data warehousing, I think, is on the way out in many cases because it doesn't support unstructured data, right? which is supported by CDPs and data lakes, is my understanding. I'm not a technology guy, but that's what I've heard. But has all these tech solutions, the idea of having a unified view through the CDP, or through the using the data lake for various sources of data, has it helped us address the problem of silos, right? Where the guy next to me, sitting next to me, will have the same data in a different Excel sheet, and I have the same data in a different Excel sheet, and we don't know that we have the same data, right? And we are reaching out to the same person maybe in different ways. So, what really are the challenges that people like yourselves face in handling data?
Yeah, so just before I answer your question, a little bit about the cloud, and I completely concur with Sharad and Ankit that for us also, it's not that we are not on the cloud, but it is use case basis. Okay, so we are not averse to the cloud, like Sharad said, but it's not that we have a target internally or from the board that you need to move to the cloud. So if moving to the cloud makes sense, we'll go to the cloud. But like I said in the beginning, we have to solve a business problem. Now, coming to your question about data warehouse, data lake, CDP. And I don't know why everybody believes that structured data problems are solved, and it is only the unstructured data problems that we need to solve. I have a different view here, okay? And all of us on the panel spoke about the quality of data. And that is the quality of the structured data itself, right? Sharad touched upon not having data in an electronic format. That is a challenge that we also had, because we are also a 20-year-old company, and along with personal information and financial information, we also carry medical information, because medical history is of prime importance to us. And when we started operations, nobody thought of having medical records in an electronic format. It worked on physical records. And now we are using AI and ML in underwriting as well. And we realized if you don't have the history of Alokesh, his medical history, then it is very difficult for a machine to underwrite, right? So we actually embarked on a journey to digitize all those physical records. It was perhaps easier for us because we are not still a 100-year-old company, Sharad. But so my point is that there are still challenges around the structured data also, which all of us need to overcome. It could be digitizing the data, it could be quality of data, it could be standardizing data, because we all have perhaps multiple applications. And I'll just give a simple example, right?
Sure.
In some system, you may define the gender as MALE and FEMALE. In some, it could be M and F, right? So that standardization has to happen, okay? So those problems need to be overcome and are being overcome by us, and I'm sure by others, okay? Unstructured data, yes, that is something that one needs to look at if we really have to give that real-time personalized experience to our customers. But it may not be relevant for each and every use case. So wherever it is relevant, one needs to solve the problem. Now that is about and of course we need to have a data governance layer, okay? Because like Sharad mentioned, or somebody mentioned, I don't remember who, that today you have solved the data problem. Tomorrow, data would have changed. Do we have a good strong governance around it to ensure that the data the problem that we solve today, has it remained unsolved, has it remained solved, or have we complicated our life? So data governance is another thing that we need to look at. But data by itself doesn't mean anything, right? I think Suchetna, you said customer 360, or somebody mentioned it. So we still need to build a view around it, right? A business user is doesn't matter whether you have a good customer data mart or you have good, beautiful, unstructured data. Yeah. Is the dashboard available? Is it baked into the business process? And therefore, I want to touch upon another element along with the data warehouse, data lake, and CDP, that is the CRM. And I think in the earlier panel, somebody did mention about the unified journeys. If you want to give omni-channel experience to the customer, having the data in one place is not going to be enough. Your journeys also need to be uniform. So maybe have one CRM which has these unified journeys, which talks to the single version of truth. And then only we will be able to give the same kind of experience to our customers.
Right, Kirti. I'll come to Mr. Kelkar. So we asked Kirti about her challenges. She's added on to those challenges. And so what do you think about your company and the data challenges that you have? Forget not only structured, unstructured, but how do you ensure that you are fully capitalizing on the data that you have to give a unified experience across channels?
Yeah, as journalists, we love challenges. We are very skeptical. We're trained to be skeptical. So we'll come with the challenges question to everybody after Subhash.
Mr. Kelkar, you're on mute.
I think it's a real challenge that you talked about, and some of our customers are more than 20 years with us. Okay, and they have grown. Their financial position has changed. Their disposable incomes have changed. Their priorities in life have changed. Their risk profiles have changed. So not only should we get a data about the customers, and barring few of the basic data elements like mobile and email, those are also changing every few years. Earlier you were using Yahoo account, now you use Gmail account, tomorrow you will use some other account. But mobile phones, if you shift places as you would do over a period of 20 years, you would. So those challenges are simple to handle. My take is, but what is not simple to handle is the said unsaid data. Like you have been promoted, so your disposable income is much higher than you were when you joined ICICI Securities 20 years back. So how do I know that data? How do I get the data from the social media? How do I ensure that this customer is more social than physical? Some of these elements. And what we are observing is more and more India is coming online. So not only the millennials was the story. Now the Gen Z, they want to only deal with everything online. So I think for us, different customer segments, and it is easier for us to do the data updates on millennials and Gen Z, but it is very difficult for us to go to somebody who is about to retire or retiring and have plans to retire and get data from them. Some of them don't even have email IDs, so it is very difficult for us to communicate with them in the normal fashion. So those are some of the priorities and challenges that we face. The other aspect of data is like she was saying, Kirti was saying about unstructured data. The clickstream data is very important to us because how you interact with the platform is very important to us. So you were looking up one script 3 times last week, and now that script has a moment. Is there a way I can identify that and give you a proactive nudge that there is a moment in this, and would you be interested? So that kind of stuff. So we are trying to get not just the data right, but also the possibilities of how we can cross-sell, upsell, and make use of that data to increase the revenue or give a more improved customer satisfaction or do some cost optimization. One of these 3 things.
Right. Mr. Kelkar, when you're talking about millennials and Gen Z, Mr. Saxena is laughing to himself. He's dealt with his bank has dealt with customers since 1908, where till very recently, till even the 1990s, you have had set of data coming into you, which you never thought of storing it or putting it in an electronic form. So how do you deal with that challenge? Kirti, did you want to say something?
Yes, I just wanted to add on to what Subhash said. So we also have this challenge, right? That not all data elements are available with us. So we use proxy data. We see for us income is important. Income of an individual is important. Now, if we don't get that income, can we use some proxy for that? And that is how we enrich our database is the only point that I wanted to make.
Okay.
Mr. Saxena.
Yeah. So I think I'll not overbeat the point of data quality, and we have said much about it, and we are working. We have got a continuous engagement with all the business units, operation units for data quality. We have got a data quality index which we keep measuring week on week. We keep trying to find out data where would be available and so on. But now I'll go to the next aspect, and I'll touch upon something with Ankit and Kirti said. First, coming to Ankit. Ankit said that it is immaterial whether what is happening in a data lake for the end user. It should be a black box that the word he used, and the end user should be using it. I think my view is pretty different from this one. With the sort of data warehouse structure going away, some people still use it synonymously with the data lake and so on. But I think with data lake, we are getting onto a different level of engagement with our business users. Now, what we are doing is with data lake, we are very clearly defining the data elements which are coming into it. There is a lot of governance around it. There's data lineage built into it. And we are giving the tools and technologies in the hands of end users to be able to do what something techie in the data warehouse was doing. And there was a huge turnaround time for that. Having said that, this has now given a capability to do a lot of modeling. Now, again, I'm coming to two different types of models. If I have a model for, say, propensity of customer for buying another product, cross sell or upsell. Now, this is a sort of benign model because I can validate it. Even if it is not a great model, anyway, I'll not be able to make much a cross sell or upsell. But imagine I have a early warning system model for projecting whether a corporate is going to default and I need to do some, I need to take some action. Or I have a risk model for saying forecasting my CRR requirement. Now, what is very important now in this age is that my business folks understand, or for example, a lot of it is being talked about and many companies are doing, as in we saw in the previous panel discussion, automated credit appraisal. It sounds very good, automated credit appraisal, but has that machine learning model, which is now saying yes to somebody or no to somebody, has got a bias built into it? How many people understand this in the organization? If a regulated entity, being a regulated entity, I get a question that I am giving to a certain section of society and not and depriving certain section of society in a manner which should not be there, who answers for this? So I think we are now, with all these tools and technology, we are getting into a very different phase where we have to carry, while we it's a very different conflicting situation. While we give power to the end users to do whatever they want, they churn out data themselves, do basic analysis, not depending on the IT folks, they have to be very, very deeply involved in all these aspects which I alluded to. Customer service and all that is important. Yes, it is very important. But these are the fundamental things on which survival of an institution like ours depend. And that is where we keep emphasizing within our organization that, look here, don't just give your requirement and whatever a 25-year-old is churning out for you, believe that and just go ahead and believe the output and take your decisions. You have to understand that. And that is our biggest challenge.
Okay, looks like Samir has had some network issue. Samir, I can see him in the panelist list also. Hopefully he'll come back. Nidhi, you might just want to look at it. Nidhi, my colleague in the back end. And meanwhile, while we wait for Samir, and we are almost, of course, out of time also, but one interesting question that I wanted to ask all of you, and especially Ankit, is about the business intelligence tools, right? How relevant they. Okay, Samir is back.
Samir is back. Yeah.
Come to the business intelligence question after Samir. So Samir, we were talking about data and from Bank of Baroda and ICICI and Kotak life insurance perspectives. Now, PhonePe is a digital native company, right? So can we safely say that you have actually leapfrogged all the legacy data problems that they have? What are the challenges then for you as an organization looking forward? Is accurate data something that you have successfully tackled?
I think accuracy is not as much of a problem, to be fair, partly because our relationship starts with a mobile number that's verified. So we took a call a while back that you can't create an account unless I verify your mobile number through your device as opposed to an OTP entry. Because one problem I have with OTPs is you can ask somebody the OTP and you can create an account on their behalf, and people have accounts they don't even know. That becomes a problem. Second, we don't allow email-based logins. I think it's not that email is dead. Email never happened for anyone whose first introduction to the internet era is post-Geo. All of us adopted smartphones after a laptop, after a work desktop, after some other device. For 300-400 million people, the internet didn't exist until they started using their smartphones with data. And for that era, for that population, They use WhatsApp, it has a mobile number. They use a Flipkart, they use a Swiggy or Nola or any of these services. Uh, all their relationships, even with the YouTube or Google today, they're all with an email. With a mobile number. The other good news for this industry, for our sector, is thanks to the way the DBT program is structured. The Aadhaar number, the bank account, and the mobile number, that jam triangle is just brilliant. Because the one thing you're counting on is anyone who wants any kind of subsidy needs to have their mobile number updated both with the government and with their bank. And if you actually see the data, government introduced number portability before they actually introduced the program at scale. The genius of that model is that people don't change their mobile numbers as frequently as they change their phones now. Earlier, it used to be the other way around. So there's a silver lining in all of this madness is that your relationship with the customer is longer today because it's still led by the same mobile number, longer and longer than it used to be. I think so. Therefore, I think data relationship or identity relationship is not a problem. Problems for a company like ours, any mobile app today has two choices to make. Am I data greedy or am I data light? We actually find ourselves, and I was amused listening to my colleagues who are trying to get more data and crisper identities. I'm on a bit of a war footing internally, trying to actually pare away data, because what we are finding is, again, marketeers and then the core product team. Marketeers will always tell you they want all types of data. They never know how to use it. And my co-founder and I are, I look at the marketing and product side, but we're both engineers by background. And we often use this phrase internally: artificial intelligence is not a substitute for real stupidity, right? You can't claim to need 250, 300 attributes about a user's life and then manually actually target them. Those two don't happen concurrently. I think someone very pertinently pointed out, either you move towards an automated state with machine learning, and that can happen only within the app. So there's no need for data to leave the app or be in path of employees as well. So we're constantly trying to rationalize how much data we capture, because I do think capturing a lot of data will always expose you at some point or the other. Either somebody will do something stupid and betray the trust of the user, or they'll do something too invasive and they'll spook the user, right? Even the best recommendation with retargeting, again, I'll use a simple example. We've all heard of marketers who are retargeting. We've had this holy cow at PhonePe since we launched. We do not allow our marketing teams to share our consumers' data and do retargeting on YouTube, Facebook, anywhere else. We are an anomaly almost in the industry. People laugh when they hear this. I just don't think it ends well. Someday, someone's going to publish every other advertising partner's data on the dark web for 5 rupees a pop. I mean, how often do we hear about these leaks of like 200 million accounts, 300 million accounts being out there? Again, how precise are you going to get with your retargeting? You got to really think about that. And if you are going to do it, are you doing it in an encrypted SHA manner, or am I giving my entire database? When I look at partners who promise me retargeting solutions, the kind of data they ask for is ridiculous. If I'm retargeting you, or rather for you, I need your mobile number. That's your identity that carries across apps. Then why do I need your name and everything else about you? Then I don't. So I think that's the other thing we always grapple with. We also have advertising solutions on our platform. Our partners keep telling us, hey, this one's offering us better targeting, that one's offering us better targeting. We said, we are a payments company, we regulated on the margin, we will just not let you filter or target. It does limit the ad dollars coming our way, but I think is the right answer. Again, I'm coming from a position of, I think we are going through an inflection point in the history of the internet, where I think enough people understand that they're the product because they've been wanting everything for free. And now there's a lot of people who are saying, I don't come for free. Tell me what it will cost, at least as an option. Take YouTube Premium. 100 million people are paying to not watch annoying ads and or because they value their privacy. So we are also trying to figure out where do we land with this stuff. I think to take a data, how much do I have, how good is my quality, and how much am I able to secure it is limiting. I think you have to start at the strategy view of who do I want to be to my customer. the good thing with all these institutions, right? I mean, the Kotaks and the ICICIs and the Bank of Barodas, doesn't matter whether it was Tarpatra or his email or his mobile number, they are durable because what they offer at the core is just so precious.
Yep.
And I think that's where they should take relief, is the fact that people will always need a bank, they'll always need a like policy, they'll always need to buy securities. And so I think they have durability of a different kind.
Right.
Yeah.
That actually brings us to, I mean, you've brought us to to our next question, which is about business intelligence and how that can be used to create experiences for Gen Z or the next gen digital users. So my question is for Ankit: how effectively are financial institutions leveraging their business intelligence division?
I would like to answer this from a different view, because we are also a solution provider for financial institutes as well as other verticals, different verticals in the business. Now, what we try to do from our solution perspective is we try to augment their own business intelligence, whatever in-house systems they have. And by virtue of these augmentation, what we are trying to solve from the customer experience perspective is, what is the right segment that should be nudged? If they needs to be nudged, what is the context? And this happens in an automatic manner. As Sharad was explaining, there are a lot of modeling that happens on the data lake, right? The augmentation of that modeling, the application of that model data then works on marketing as well as on the CDP platform. The users are segmented automatically at times for certain businesses based on how they are making a purchase, how recent they have made a purchase, how frequent they are making a purchase, and what is the total worth of making a purchase. And based on these modelings, we do an auto segmentation, predictive segmentation, so that the right kind of messaging can go to the right set of users. Along with that, there are many knobs and controls that we tend to provide, right? If the user has already opted out, then the user has opted out, no matter what, whether he has opted out from a channel or whether he has opted out because of GDPR regulation, because we serve to customers across outside India as well. And second comes, what is the right time to send something? If a message needs to be sent out, it needs to be very cohesive. And that's where the orchestration engine that we provide as a solution comes into picture. Don't nudge them. Don't send them an SMS. Don't send them an email. Just see whether they are on the app, in the website, relay the message. If your message is good enough, then you can use it another channels. But it comes along with all the frequency, capping and DND controls in picture. Whether the user, which time zone the user belongs to, when do you want to send a message? Is it a transactional message or promotional message? And how many times have you nudged in the last 1 week? If there are 4 messages that have already gone to a user, why do you need to send a 5th message if the user is not responding to you? It doesn't make sense. So on and so forth, where all these BI capability comes into picture. How the financial institutions are using these days, they are using it in a lot better way, because integrations are now becoming feasible with CDP-like systems, and people are able to achieve these use cases at least.
Right, and I'm so loving this discussion. I can easily go on for another 2 hours with you all. Such deep thoughts from every one of you. It's phenomenal. Unfortunately, we are already 5 minutes over our scheduled time, and you're all very busy people. I don't want to, take up more of your time. So it's been a phenomenal day, and I will invite my colleague Suchetna to quickly summarize the key learnings from today, and then I will invite Priyam Jha from WebEngage to deliver.
So what can I say about a panel that has been this phenomenal? Really, it was great listening to you. We actually have more than 45 questions that have come in, and a large chunk of it is from people who wanted to ask you questions. Because of paucity of time, we couldn't take those questions. We began with the topic of the importance of data platforms for the BFSI, and we learned there were some challenges we knew about, but we learned about more challenges and also what you're doing to fight those challenges, and what looks like a simple thing to us when we look at an app, whether it's a life insurance company, a bank, or a security that we need to buy. But the kind of planning that goes behind it and the kind of data mining that goes behind it is some of the key takeaways from this panel today. Important things to remember, as all of you pointed out, that every decision has to be a decision that has been prompted from a customer demand, perhaps, or a business demand, and should not be demand from a certain trend that is globally prevalent or prevalent in India at any point. So thank you so much for being such a lovely panel today. Thank you for taking the time out. Hope we'll be interacting soon again sometime in future. With that, we'll call Priyam for his vote of thanks.
Please welcome Priyam Jha from WebEngage to deliver the word of thanks.
Thank you, Alokesh. Thank you, Suchetna. Thank you to all the panelists as well for a fantastic session. Good afternoon, everyone. I hope everyone had a great time at the session. I know I did. Now we have arrived at the last session of the day, which is the customary vote of thanks. As a marketing automation company that works with some fantastic BFSI brands, we have come to witness multiple instances of data and technology coming together to create powerful customer experiences. Now, the COVID-19 pandemic, of course, changed the dynamics of how BFSI companies interacted with customers. Digital transformation timelines leapfrogged by almost 5 to 10 years because customers were demanding digital financial solutions. With the Financial Marketers Summit, we wanted to create conversations around these topics, which basically help people understand how to elevate the customer experience and engagement in the digital space by leveraging data and technology. We all heard so many of those wonderful instances by our wonderful panelists. And it's not every day that you get to see India's BFSI leaders come together to have such spirited discussions about building futuristic financial products and services for our consumers. I had a fantastic time attending all of the sessions, hearing so many viewpoints about the importance of data and technology in building those powerful experiences that are being talked about so much in the digital space for BFSI. And on behalf of Team WebEngage, I would like to thank, of course, all of the attendees for taking time out at such an early time in the morning to attend the Financial Marketers Summit. We hope this session has armed you with fresh perspectives, actionable insights, and of course, some great memories as well about creating amazing digital experiences, something that you can hopefully weave into your marketing strategy going forward. I would also like to express my gratitude to all the esteemed panelists for joining in and sharing such profound insights, your practical learnings for all of our attendees, myself included. It was indeed a delight to witness the brightest minds from the BFSI industry come together to have such open and candid conversations about today's agenda. Last but not the least, I would like to thank our event partners, the Economic Times team, for helping us create and execute such a powerful and interesting event. Also, a sincere word of appreciation for our fantastic moderators, Suchetna and Alokesh Da, expertly navigated the discussion at all times, and I think that is such an important factor. I really enjoyed all of the sessions, and I'm sure all of the attendees enjoyed the same as well. We will hopefully be back with more such amazing events for all of the attendees, talking about all of the important factors that are really important to create those digital experiences. And once again, I would like to thank everyone for your time. Till we meet again, take care and have a great day.
Thank you, Priya.
Thank you
and thank
very
you all
much,
of you.
Thank you to all the panelists for joining us. We'll be in touch.
Thank you.
Goodbye.